Well, hi everybody. Is this good? Is this good and
Yes.
loud? Okay.
Yes.
Thank you for coming to my birthday party. Like, what could be more fun on my birthday than getting together with people who are also constantly thinking about property tax law and what the General Assembly is up to, and the kind of the general angst about this community-based care dream that we are all working on, and getting a little bit dressed up and having good food. So I think that it would be really nice, because we have some new members, if we get you introductions around the room. I'm from Champaign County, Illinois. We have a 708 board and a 377 board. Is it okay to start in the room? Okay. And you all don't get to have the benefit of a microphone. I'm gonna like come over. What if I do? I'm gonna do.
That seems very well.
Okay. Hi, everybody. My name is Drew Holda. I'm a member of a newly created 708 board in Lyle Township.
Hi, my name is Lisa Rose. I am also with the Lyle Township Community Mental Health Board as their admin. I have actually helped get the referendum together and get it going. Get it on. I'm Amanda Teachout, and I'm from Hanover Township Mental Health Board.
Don't worry, I'm a good professional.
I'm Denise Bradley with Madison County Mental Health Board.
Robert Clay, Madison County Mental Health Board.
Debbie Humphrey, Madison County Mental Health Board.
Hi, I'm Heather from the DeKalb County Mental Health Board.
Hello.
Hi, Leanne Shoemaker. I'm from Mason County Mental Health Board.
Is this weird, guys?
No, it's good.
Very expensive.
Maureen Hopal, Springfield, and I am with government strategy associates and your lobbyist.
Matt Maloney, also with Government Strategy Associates, and I live in Evergreen Park, Scotland.
Lisa Foster with Proviso Township Mental Health Commission.
Jesse Rosas with the Proviso Township Mental Health Commission.
So good to see you.
And we should clap for our new after.
Delilah Legria with East Mental Health Alliance. We're 7 townships, Southern King County.
And Colleen Belia, Inc. Mental Health Alliance.
My name tag says Amy Hancock, but it is now Amy Hopper. With the McLean County Health Department, for 553 and 377.
Neighbor.
Joe Russell from Green County Mental Health Subway Board, Danville.
Don Augustine Sloan, Marshall County Chair. Board 7.
Sharon Mills, DeWitt County Mental Health Board.
Ron Malka, Lyons Township Mental Health Commission.
Standing right in front of me. Sorry, that's what I just. It's hard to know where it is.
Dave Edwards, the Executive Director of the Camden County Mental Health Board.
Oh, thank you. Oh,
Dana Rosenzweig, St. Clair County Mental Health Board.
Jane Nesbitt, also from St. Clair County Mental Health Board. Happy birthday.
thank you. Best party ever. All right.
Maurice Scholten with the Taxpayers Federation, first speaker.
Mike Murray with Bloomingdale Township.
Yosh Yamanaka with Lyle Township Mental Health.
Good turnout from Lyle.
So it starts as my coordinator. So the folks online.
Oh, yeah, the folks online. Hi, folks online.
Yes. Mark Avalar, Dundee Township in Kane County, Illinois, out of Algonquin.
Good to meet you. Thank you for being here.
Thank you.
How about Chris Myers? How about you?
Chris Myers, Livingston County Mental Health Board and 377 Board.
What order should I go? How about Chelsea?
Chelsea Glass, Winnebago County Community Mental Health Board.
And I don't know this lady right next to Chelsea on my screen.
Don't know her. Her name is Terry King.
Oh, Terry King. Hi, Terry King. You want to introduce yourself?
Hi, Terry King, 708 Board, Will County.
Good to meet you.
Thank you.
That's Laura.
Oh, that's Laura. That's okay. Hello. Put her hair up. You're in disguise, Laura.
I'm having a hard time hearing, but I think you said my name, so I'm going to go. Laura Brooks from the Community Mental Health Board of Oak Park Township.
Thank you, Laura. Good to see you.
And then Shannon is next.
And Shannon.
Hi, my name is Shannon Hartnett. I'm the president of the Milton Township Mental Health Board.
Thank you.
And then Jennifer.
Jennifer. Nice.
Hi, I'm Jennifer Hutchins. I'm the manager of the Milton Township 708 Board.
Good turnout from Milton also. Elizabeth.
Unmute.
Well, maybe we'll come back. Okay, Attorney Brandy SQ.
That's our attorney, Brandy.
Hi, Brandy.
She's 708, McHenry County's attorney.
Thank you.
Hello.
And then Kim Bowdry. Kim Bowdry is with Champaign County Mental Health and Developmental Disabilities Boards too, by the way. There you go, Kim, I got it.
Thanks, Lynn.
And then the iPhone.
That's mine. I just have it so I can monitor
Oh,
the chat. That's
that's everything.
He's up in the corner. She's a traitor.
Terry. We're glad to see you. Yeah.
Yeah, hello, I'm Terry Braun, formerly from the McHenry County Mental Health Board, but now I work for Rosecrans. And Rosecrans joined as a supporting member of ACMHAI and is funded by many 708 boards.
Excellent, thank you.
Thanks.
Another member. Okay, I think that's it. I had a really good joke about PTELL for our first speaker. Just to make it really simple, there was a time in my life when I understood things like differential equations and transformational grammar and a little bit of quantum physics and all of the Latin language descendants. But then I tried to understand PTELL, and I'm not going to blame it necessarily, but my brain doesn't work the same anymore. So I don't know if it was PTELL, maybe.
Amen to that.
So, right, it's a tough one, and we're in a PTELL county, so it matters every day. Anyway, I'm looking forward to hearing you, Maurice. Do you need? Did you say that the owl is a microphone too, or?
Yes, and I'm gonna put a PowerPoint up here for.
So anyway.
The people online didn't need me to have a microphone, but people in the room, do you need me to have a microphone or no?
Maybe so.
Yes, please.
All right.
Thank you.
And then there's the arrows for the.
Perfect. All right, does that work?
Yeah, great.
All right, my name is Maurice Scholten with the Taxpayers Federation of Illinois. First, thank you for inviting me to be here to talk about property taxes and PTELL for a while. Something that, again, is not exactly the most intriguing or most exciting topic ever. I remember my cocktails parties, and this comes up and they kind of talk about it and people kind of find their way to another conversation. So you guys are kind of stuck here with me. So thank you for that. A little bit really quick about TFI, Taxpayers Federation of Illinois. We've been around since 1940. We're a nonprofit organization that focuses on property taxes, or sorry, taxes in general. When we first were organized, we focused more on property taxes because back then the sales tax was around, but it was a much smaller tax, and there was no income tax in Illinois at that point. But obviously, as time goes on, the economy has matured and changed. The tax structure in Illinois has changed. What we focus on has changed as well. And we are not a no tax organization. We understand that the government needs revenues in order to provide adequate services to the constituents. And you know, there's a separate debate as far as what adequate services are. And you know, we don't really go into that debate. We go and make sure that taxes are instituted, implied instituted in a fair way. More than else. Those are some of the principles that we evaluate our taxes by. And I will say, again, my expertise is on taxes. When we talk about property taxes in particular, there is a lot of overlap from other areas of expertise, like local government or local government governance. You know, there's your organizations, you guys belong to, the boards, there's park districts, mosquito abatement district, municipalities, counties, there's plenty of local governments in Illinois, and each of them has their own quirks. Which I don't know about. So I'm just gonna put that out there. And also, you know, another issue, you know, bonds, property taxes and bonds, they kind of have bonds are kind of a quirk in the property tax system. I don't focus on bonds, but you know, I know that they're there. So with that being said, I guess one more last thing, I am an attorney. This is not legal advice. So, you know, you feel free to take anything you learn from here, learn by your own attorneys and see if they agree with me or disagree. So we're gonna talk about really quick today. We're gonna have an overview of the entire property tax system, kind of like just kind of from a 10,000 foot above the ground view. We'll get a PTELL, and then we can answer questions at that. Or yeah. So here are the big three taxes that we collect in Illinois: state and local taxes. The sales tax is about $20 billion. Individual income tax for $27 billion, and property taxes is just under $35 billion. So you see property taxes is the biggest portion, biggest of those state and local taxes. The sales tax at $20 billion, about half of it goes to the state, another half goes to local governments throughout the state, depending on what the rate is and whether they impose a sales tax rate. Individual income taxes, most of that goes to the state, but the state does do some revenue sharing with local governments through that mechanism as well. And property taxes, that is all local government revenue. The state has a role in the administration of the property taxes, but they don't get a dime of money collected. So next we talk about $35 billion. That's the size of the property tax pie. The chart on the left-hand side shows how that $35 billion is allocated. The vast majority of it, 20 billion or so, about 60%, goes to school districts, and that includes community college districts. The next biggest slice of the pie is municipalities. And then we talk about special districts, counties, and the smallest one is township and roads. And everybody complains about property taxes being too high. And one of the solutions that's also often floated, or another complaint about Illinois, we have too many units of local governments. I think first off, the number of how many local governments we have depends on your definition of a local government. The census has one figure, the Department of Revenue has a different figure. So, you know, what's your definition? We generally just use the Department of Revenue's definition, which is local governments that have the ability to levy a property tax, which excludes RTA, for example, up in Chicago, which is a pretty big organization. They fund a lot of money to CTA, Metro, and Pace, and those are not local governments because they don't have the ability to impose a property tax, and those employ thousands of people and have a budget of $1 billion. So it kind of sounds like it should be a local government, but not in these figures. But anyways, you see school districts make up about 15% of the number of local governments. You know, they collect property taxes, and municipalities about 20%. The biggest slice of the pie is the special districts. That is mosquito abatement districts, park districts, library districts, drainage districts, a bunch of different types of districts that we have here in Illinois. The counties is a very small portion, and the next is the townships and roads. And one of the ways that people suggest to kind of we lower property taxes, we got rid of all those special districts, we got rid of townships, that we'd have, you know, a lot fewer local governments, and then therefore we could collect less property taxes. You know, they do make more than half of the local governments that we have, but they're overall they only collect about $4 billion, I think it is $4 billion of the overall pie. And even if you were about to abolish all those local governments, they still provide services to their constituents. And I always say, all right, let's assume that half of their revenues that they collect is for overhead and half is for providing services. But I think it's probably more of that is for providing services, but kind of for sake of arguments. Then you're talking about, you know, reducing, saving about $2 billion, which again it's not nothing. But when people complain about property taxes, you say, hey, we're going to reduce property taxes by, you know, about 5%. I think the average person is still going to say, well, that's not enough. So, and not to mention all the political capital that we have to utilize in order to actually eliminate those almost 4,000 local governments in Illinois. So now here we have a chart over time from since 2000, the total EAV in Illinois, equalized assessed value. And you can see, you know, in the early 2000s, property values increased and they peaked out. And then you have the housing crash after 2008, and it kind of bottomed out in 2011. It kind of has increased since then. And recently, just before COVID, we had surpassed the previous 2009 high as far as equalized assessed value. I will mention one thing with this chart. You can see the peak is probably again closer to 2009, I think maybe 2010. Whereas I think generally speaking, home values peaked in 2006, late 2006, early 2007. So it shows that there basically is a lag between what happens in the real estate market and what happens in assessed values. I think you also see that, you know, while we have an increase for the last 5 or 7 years, we don't really see a dramatic increase of what's happened to real estate prices since COVID. I think you'll see that in the next coming years. And obviously what happens in the real estate market, which happened last year and also this year, you know, to be determined. This next chart shows the total property tax collected over the same time period going back to 2000. You can see this is a pretty level chart. Like there's not a bunch of spikes up and down. It is a pretty level tax. And it's one of the things that local governments like about property taxes. It is predictable. That, you know, income taxes, if you had the same chart for income taxes over the last 20 years, you would see a lot more spikes and drops as the economy does well, as it crashes, and also part of it is any rate changes that the state does. But you see this is pretty consistent. This next one shows the tax rate over time. So essentially the second chart I showed you divided by the first chart. I'm gonna go to the next one. So this is the actual. This will be the statutory rate that you would see on your tax bill. I prefer this one, more of an effective tax rate, because assessed values are 1/3 of market value. You know, nobody pays 10% of the market value of their house. This is a more accurate chart as far as when you know how much your house is worth or a building is worth. So you can see again for the first decade, property values essentially were increasing faster than property taxes, which caused a slow decrease in the rate. And then from 2008 to 2009, when property values decreased, property tax rates had to go up in order to generate the same amount of money. Hence, you see that spike. And then over the last 5-7 years, there's been a slight decrease in the rate. Again, as property values have risen faster than property taxes. So let's try to do the overview on property tax. Now we can dive into PTELL. So the first question is, do we actually know what PTELL stands for?
No. Locked it out.
Extension.
Property tax extension limitation law.
There we go. Look at the first 2 letters are pretty easy, right? We're talking about property taxes. We know what it is. The extension limitation law, it's kind of a mouthful. This was passed in the early 90s. I think if this was the same law were to be passed today, that legislators, General Assembly would find a name that's a little sexier, a little pops out, a little more uneasy to understand. So if the legislator went to knock on a constituent's door and say, hey, we passed PTELL or whatever the new actual letters is, that voter would actually understand what that is. Like, hey, so it does something, I mean, it has the word limitation in there, but it kind of gets buried by everything else. And what's an extension, right? So here overall, we're it could be something the property tax cycle of how property taxes get determined, all the way from when a taxing district first talks about their budget to when the property bill hits every property owner's door. The two rows kind of happen concurrently at the same time. We'll start at the bottom one. Essentially, is taxing district has to pass their budget. They have, they have a proposed budget, they have hearings, if, horse trading back and forth to figure out what their needs are, what the revenue sources are, what they can do. And eventually they pass a levy ordinance. And that levy ordinance is a dollar amount. And it's more than just $1 amount. We'll get to that in the details, but it's generally we need $1 million. They don't say we're going to have a property tax rate of 1%. So while that's going on, the town, start with the township assessor and chief county assessment officer. Different counties are organized differently. Sometimes there's a township assessor, sometimes there's just one assessor for the county, but they assess all the properties within their jurisdiction. Property owners can appeal to their office and say, hey, you got it wrong. You have my building is 5,000 square feet, it's only 4,000 square feet, or whatever the issue is. At some point, also within, one thing I'll mention is if they have different township assessors, the county assessment officer will equalize among townships. So one of the things that's important to do in property taxes is make sure that everybody's assessed evenly or equally. So if I have a house and you have a house and the same house, they're a mile away, but we live in different townships or different counties, but they're worth the same, we should have the same assessment. So we pay the same relative taxes depending on what the tax rate is in our jurisdiction. So the assessment officer, the county assessment officer will equalize, basically have a multiplier. They compare the assessments in the township to what the property sales, actually what's happening, to see if they are over assessing, under assessing, or got a spot on, and they'll apply that factor to each township. The state does the same thing later in the process. For counties, kind of compare counties, one county to the other. Most of the counties, it's pretty close to 1% or 1, so not much of a multiplier. Sometimes 1.02 or 0.98. The exception is Cook County. That's more lately, it's been over 3 because they assess their properties differently, and you can. That's a whole nother presentation. But I mean, basically, most 101 counties assess properties at 33% of fair market value. Cook County does commercial industrial properties at 25% and residential at 10%, and hence that multiplier by 3 equalizes. So taxing districts, Cook County and say Lake County, end up being fair. If the property owner is still unhappy with their taxes,
Text me if anything's up. I'll be in Monday. Okay, sounds good. Okay, yeah, call me or text me if they're, I'll try to check my email. So thank you for doing the.
Anyway, so board review, they're basically
Gonna have an issue sitting in my warm car, right? It's just papers and.
You're not muted.
the fun of hybrid events. So within the board of review, essentially, like if the property owner does not like their assessment, they can appeal to the board of review. This is a needed step if they want to appeal further in the process. After the board of review, there's 2 other, they can go to either court or property tax appeal board. That's not on here. But in order to appeal to those jurisdictions, you have to appeal at the board of review. One thing I will say, any reductions in the assessed value at the board of review or even at the assessor's office, generally 90% of the time won't actually affect taxing districts. What will happen is the tax base will shrink a little. The levy, how much the taxing districts ask for will be the same, so you get a little bit higher tax rate. So instead of 8%, it'll be 8.1%, or whatever the number will actually be. If there are reductions at the property tax appeal board or a certain court, that's when taxing districts actually have to issue refunds. So they levied $1 million, but they have to issue a refund. There was a new law that kind of addresses that we can get into, but just kind of make that point. So after the board of review, here's all the different appeals. They certify the assessments and send that information to the county clerk. And the county clerk gets that information plus all the levy ordinances from all the taxing districts within their county. And then they get to put the 2 together, divide the 2, the levy request by the private tax base to get a tax rate. Each taxing district has its own tax rate, and properties, can be in multiple, obviously are going to be in multiple local government or local, be in multiple taxing districts, and there'll be some overlap. So, you can have a house over here and a house over here that have 8 of the same taxing districts, but they're in different townships, so they're gonna have slightly different tax rates. So the county clerk has to figure all that out. And when we talk about PTEL, most of the county clerk essentially administers, I would say they do the vast majority of the work associated with the county clerk or with PTEL. So that's what we get focused on. And then after the county clerk calculates all the rates, they send that information to the county treasurer, and the county treasurer has the information with the assessor and all the addresses, and they actually mail out each individual property tax bill to the address that shows the actual dollars and cents that are owed per property, and then collect that money from the taxpayers and remit it to the taxing districts. A lot of times when somebody gets a property tax bill at this point, this is like, hey, my property taxes went up by 15%, something's wrong, they want to appeal. At that point, it's too late. Unless they appeal to the board of review, they don't have any means of addressing that. Often they'll go to the county official or whoever to complain, and they'll say, well, it's done already, but you can appeal your taxes for next year if that hasn't already passed. Most counties, this cycle is about a year long, give or take. In Cook County, the process is maybe a year and a half. It depends from one year to the next. Last year, for example, the county clerk did not mail out tax bills out. I think it was until late November on Thanksgiving, maybe even later than that. At that point, the taxing districts are adopting levies for the following year. So it's just kind of, it's hard to do up there. There's a lot more properties, a lot very complicated, but that's just the nature of the beast. So here we have the Champaign County rate calculation. Kind of an example. We're not gonna go, you can see there's a lot of numbers here. We're gonna go through some of these and you kind of figure out what they are, what's important. Here, I guess I'll kind of mention, we have the maximum rate, which is not related to PTEL, but it's still there. And then the bottom, we have total capped and not capped. So totals capped means the total of funds that are not subject to PTEL. And then not capped would be funds that are not subject to PTEL. So you kind of have, even though you have this is the actual county, the government of the county in Champaign, their budget request. You see some of they still have some funds that are not subject to PTEL. And then finally, you have, I think there's 12 or 13 funds here that the county levied for themselves. So when you're not going to see all these different funds and these rates on your property tax bill, you'll see the final bill, the final rate of, in this case, that can get to be what, 0.8342, for example, but they have all these different funds, and each of these funds have different rules for how they get levied and things like that. About it for that one. So here, and the important question is, where does PTEL apply? When we went around the room and introduced, it sounded like most people in the room are subject to PTEL or live in the county. That does, which is good. Otherwise, if nobody cared about PTEL, I'm not sure why I would be here. There's some differences. When it was first passed, it applied to the collar counties. You can tell up in the northeast part of the state, the ones with stripes. Applied to them first the 1991 levy year. 3 years later, it applied to Cook County. In those counties, the PTEL applied to them automatically. Kind of the General Assembly said, these counties, you're going to be subject to PTEL. I don't care what you say. Everybody else had the option to opt into PTEL. So the states with the blue dots, those are states that put the question on the referendum at election, and the voters said, yes, we want to be subject to PTEL. And those, again, then they are. And you have the counties in red put a question on the ballot, and the voter rejected the question, and they are not subject to PTEL. And the white ones never put the question on the ballot, and therefore not subject to PTEL. So again, PTEL and kind of like the big picture, what the General Assembly was thinking, at least what I think they were thinking, and this was passed, was it 30 years ago by now? More than 30 years ago. I wasn't doing property taxes back then. Basically, the determination was that property taxes in the suburbs were rising quickly. Basically, property values were rising quickly and faster than inflation was. So property taxing districts were kind of maybe keeping the rate the same and getting 7, 8, 9% increases a year, while people were, their incomes were not increasing by that much. So the determination was, that a local government's property tax levy should be, should be better tied to CPI rather than the cost of the tax base or the value of the tax base that they govern. Whether it's correct or not, I don't know. Obviously, all the taxing districts are different as far as what roles they provide. In the state of Illinois, for example, we don't have property taxes in the state. When a recession hits, that's when their expenditures generally tend to increase. They have more demand for their services, and then when the economy is doing well, the demand for services decreases, but then that's when revenues increase. So it's kind of counter-cyclical. But generally speaking, taxing districts that are subject to PTELL can increase their levy each year by 5% or CPI, whichever is less. Historically, so right now we are in 2023 calendar year, right? The way the property tax cycle works, the levy year 2022, the levies were adopted in 22, those are going to be paid in 2023. 2022 levy year was the first year that CPI was higher than 5%. So we don't, and those levies have been adopted, the property tax bill, the bills are kind of in the process of going out. Actually, this morning I went online and I found my property tax bill for this next year. It was issued last week. It wasn't ready, but now it is. So we're kind of right in the process of tax bills actually being calculated and going out. So we'll see what kind of increase there is going forward. I guess going back, you remember the property tax extension graph, historically it's been under 5%. That graph went up until taxes that were paid last year. So it does not reflect this new levy year that has a 5% CPI, and the CPI for the 2023 levy year is also 5%. So right there, in these 2 years, taxing districts can increase their levy by up to 10%, which historically speaking is a significant amount. As we know, inflation, it's the first time we've had high inflation since the late 70s, early 80s, when PTELL did not exist yet. And also, PTELL does not apply to home rule governments. So this is generally municipalities who have gone to referendum and different ways to become home rule. But if you're a home rule municipality, it doesn't apply to you. The only other government that is home rule that is a municipality is the county of Cook. And then there's special rules for taxing districts that are multiple counties. So if you have a taxing district, there are some that are going to be in two that overlap counties, partially in, let's say, Cook County and partially in Lake County. And there are different rules based on whether the if that taxing district is subject to PTELL, based on whether the county was made subject to PTELL by General Assembly, so essentially whether it's Cook or the suburban counties, and then or whether the county is subject to PTELL because of a referendum. And then also it depends on the county that the taxing district is not, that it is also in, that is not subject to PTELL, whether it just never had a referendum question or whether that county actually rejected the referendum. So there's different rules, and they're kind of quirky. It's not like a majority of your EAV is in one county and then you're subject to PTELL or not. And then what PTELL isn't. Nothing in PTELL limits the change in a property assessment. Your properties can go, it can be assessed from $100,000 to $120,000 EAV in 1 year. And that's fine. And that's what PTELL says fine, but it doesn't matter. Just because your assessment goes up by 20% doesn't mean your taxes are gonna go up by 20%. If everybody's property goes up by, property's value goes up by 20%, well, then the tax rate will most likely come down, and your share of the pie will be essentially the same size, and you'll pay that CPI increase most likely, but it won't be, again, that 20% increase. And also PTELL doesn't limit the change in the individual property tax bill. If your property has an increased assessment of 20% and all your neighbors' assessments are flat, then you are going to have an increase in your tax bill. The rate will probably go up a little, and there's going to deal with it, right? So PTELL, it isn't a limit on an individual property tax bill or assessments. It is a limit on the levy of the taxing districts. So back in the 90s, they passed PTELL, and the question is kind of like, well, there's all this other statute that's been in place for years and decades. And how does it fit in? Well, PTEL doesn't replace any of that for the most part. It just kind of sits on top of it. So you have to go through all the old rules, and now you have PTEL to deal with as well, for the most part. I will say really quick, just about everything I say, you probably find an exception to, which makes this, trying to explain this and understand it that much harder, right? If they said, hey, PTEL, here's PTEL, here are the four corners of the statute, and this is what you have to deal with, you don't have to worry about anything outside it, it'd be a lot easier. Unfortunately, so many times when the General Assembly passes a law, they like to use, notwithstanding any language to the contrary, A, B, C, D. So it's got to ignore everything else we saw. We broke, whether it be 10 years ago, last year, 50 years ago, this is what matters. And when they do that, and then they do it again in 10 years, it gets really complicated. So these are kind of the statutes that give the clerk or the duty to establish tax rates. You see, prior to the extension, the county clerk shall be determine the maximum amount of tax authorized to be levied by any statute. So any statute's pretty broad. This is a statute in the property tax code that is not in PTEL. So it covers PTEL, it covers, again, the levying statutes that give the taxing districts the authority to levy property taxes. And finally, you have language in PTEL 18-0195 that says tax extensions made under sections 1845, which I just referred, and 18105 are further limited by the provisions of this law, PTEL. So making clear that PTEL applies when the county clerk calculates rates. So again, the old laws still apply unless they're only by PTEL or unless PTEL says something else. So here are some terms under PTEL that some of the words you kind of probably can guess what they are, like new rate, new property. That sounds like easy to understand. And then aggregate extension, like what does that mean? Aggregate extension is essentially for the current year, the levy made by the taxing district for funds that are subject to PTEL. So again, we talk about the county, they have most of the funds are covered by PTEL. We're just looking at the funds that are governed by PTEL, what the overall dollars levied by those funds are. The aggregate extension base is the same thing, except it is for what the taxing district levied last year. Again, funds that are subject to PTEL. The extension limitation is essentially a CPI increase, or the 5% or CPI, whichever is less increase. Again, there's an exception. One of the ways that the taxing district can kind of get around PTEL is go to referendum, and in the referendum they can ask for an increase in the extension limitation. But again, generally we'll say consider it's the CPI increase or the annual increase that taxing district gets from the previous year. Limiting rate is essentially what PTEL kind of spits out, like the final number. It is it'll be a rate, and that is the maximum rate that the taxing district can levy, at least for the funds subject to PTEL. New rate, this is something that PTEL was created. If a taxing district didn't levy all the funds that they were authorized to, they created this definition, new rate, and how a taxing district would end up being able to levy that new rate. And if a new property, essentially it's new construction in the taxing district. There's kind of an exception to PTEL again, we'll get to more in later on. And then debt service extension base, essentially this is kind of like a levy type, a group of funds that the taxing district that you can use to pay off bonds. One of the exceptions to pay a bond or for PTEL, generally bonds issued prior to when the taxing district became subject to PTEL, they were kind of outside of it. But there was only understanding like, hey, you can still have some money to use if you want to issue bonds going forward. But again, debt bonds is not my expertise, so about as much as I'll mention right there. So here's the formula for PTEL. So you mentioned differential equations in undergrad. I was a mechanical engineer, so I took differential equations. I know that, and this kind of looks like Latin, right?
Yeah.
So we'll go to the next slide, kind of at least help us out. Try to explain in English what some of those terms are. So yeah, first the aggregate extension base. We said it's what the taxing district levied the previous year. Again, funds subject to PTEL. The next is 1 plus CPI. Essentially, it's that inflationary increase. It's actually the extension limitation, but again, most for 90 some odd percent of the time, it's going to be 1 plus CPI. So again, CPI is 5%. That'll be 1 plus 5%. So 1.05. You can see that kind of what they levied last year times 1.05 gets that 5% increase. And the denominator, essentially what PTELL wants to do is look at the previous year, assume everything was static with the exception of increasing property values, and see what the tax, give the 5% or whatever that is, I'm going to say 5% increases, and what the tax rate would have been given those increase in property values. So we have the current EAV, that's the first term, and that's value of the EAV, the value of all the property within the taxing district for the current year. And we have to make adjustments to make it so that that tax base is more similar to what it was last year. So again, for example, if the taxing district annexed a new subdivision or some 100 new houses, there's an understanding that the amount of services that a taxing district will have to provide will probably increase more than the CPI increase. They're taking on new constituents. So that's why we kind of take them out, because now we had the tax base was expanded. We want to remove that and just kind of look at last year's tax base, but with the inflationary increases to property values. Another thing we're going to, the opposite, we subtract out annexations, but we're going to add back disconnections. So if taxing district kick property out, we actually want to put them back in to kind of see what the overall picture looked like. The other thing we're going to subtract out is new property. Again, if there was 100 acres of cornfields that was developed into 200 houses or 150 houses, however it may be, that what those houses weren't there last year, it was a cornfield. So we want to subtract at least the improvement values of those properties to get to more what the EAV would have looked like last year minus that new construction, and then also recovered TIF values. So when a TIF expires on the off chance they actually do expire and then the municipality doesn't get an extension for the TIF, any of that TIF increment is essentially treated the same way as new property. So the taxing district will get an increase for that new property on top of the CPI increase. So that makes sense.
Yes.
So again, we want the top is the kind of the numerator. The dollars that the taxing district have, we want to give them that 5% increase. In the bottom, we want to take essentially the current EAV, but we want to look at it, the properties that were subject to tax the previous year, and just look at that normal inflationary increase in property value and not substantive changes to the tax base.
That's a disconnection.
It's the opposite of annexation. So the taxing district kicks out property. I'm not sure how often that actually happens. Usually they annex, they get more and more territory, right? But if they happen to kick out some houses or whatever property, those we want to add those back in, just kind of again look at that previous year. And because I guess one of the things there is disconnection. Unlike new property. Yeah, we're sure. Oh, yeah, but that's what it is. So I figure out some math in my head. Never good. All right, on the next one. So again, and then one more thing. You do this formula, and the answer, the result is the limiting rate. That again, when I said that's kind of what PTELL kind of spits out. That is the maximum tax rate that the taxing district can institute for that year. Again, at least for the funds subject to PTELL. I can always kind of the couch everything I say. So again, here is the Champaign County rate calculation. And here in this column, we actually have the limited rate. So it's 0.8301. You can't necessarily see the bottom, the back, I'm sure, but it doesn't matter. That's what PTELL spit out. Here was the initial levy request by the county. It resulted in a tax rate of 0.831 or 0.832. 0.8323, which is slightly higher than 0.8301 that PTELL said the county was your maximum rate. So then the county clerk has to reduce the different rates in order so the maximum rate is actually equal to what PTELL said it would be. Generally speaking, if the taxing district doesn't include any special instructions to the county clerk, they will reduce the rates proportionally. So they have to decrease everything by 2%. They'll decrease all the levies by all the levies of all the funds by 2% to get to the actual to get to the maximum rate that's allowed by PTELL. A taxing district can include special instructions, say, hey, if you're over the PTELL limit, just reduce the general levy and leave all the other special levies the same, or whatever special instructions they want to put on the clerk. I guess one other thing I'll mention here. So again, this is for Champaign County. They levied $38.2 million. From property taxes. I believe for Champaign County, this is about 20% of their total budget. They get money from sales taxes. They get money from other fines and fees. They get other money from the state and the Fed for grants. So again, this is just one portion of their revenue pie. So again, if they don't have if they don't receive enough money for any of these funds, or whenever they have other revenue sources they can use to help fund those expenditures if they want to. You can see here the revenue recapture. This is actually the only fund that is not subject to PTELL, the ones that the county levied. So you can see PTELL's not capped 187. That's here, so that's why that's 0.8301. That's the PTELL fund, PTELL rate. So 0.8342. That's the actual rate that would show up on a property tax bill.
So collectively, that's referred to as the aggregate then.
Yeah, I mean, I guess for PTELL purposes, I mean, when we talk about the aggregate extension base, or actually the aggregate extension, it's this $38 million number, because it only looks at the levies that are subject to PTELL. For this county, the numbers are almost the same. That's not always gonna be the case. Sometimes they're gonna have more bonds. It's one of the exceptions. Again, we always we initially look down at this. We're getting into that. That 0.83 number, that is the maximum limit rate for the aggregate rate. So the overall rate. One of the is one of the exchanges that was made in part of PTELL was they're saying taxing districts will give you more flexibility as far as where you want to collect funds for, but we're going to limit it. We just care about the overall number. If you want to go back really quick, if you want to lower the IMRF or the county highway or whatever fund by 10% and increase the general by 10% or whatever, likewise, in order to get, we'll say $1 million, percentages don't work out. You can do that. But we just want to make sure that your total is that 0.830. But there are still exceptions, because there's always exceptions. Here we have this maximum rate column. Some of the rates have a maximum rate of 0. It means there is no maximum rate for that levy, that the county can levy up to 1, 2, 3. Again, for that levy, they're still governed by PTELL. But if they wanted that 0.8301, they could zero out all the different levies and just have a levy of 0.8301 under the general fund if they wanted. But other rates do have maximums that are in statute. And those rates, how that maximum is, how a taxing district, let's step back. If we were in a county that was not subject to PTELL, we would still have those same maximum rates that are in the statutes that give the taxing district the levying authority. Some of them you can levy automatically up to a certain amount. And if you want to go above that certain amount, there are different ways you can you can raise above a certain amount. Sometimes you need to go to referendum and say, hey, voters, I want to be able to, I currently have a maximum rate of 0.05. I want to make that 0.05 rate 0.1. So go to referendum, the majority agree with you, you get to increase it to 0.1. Other ways that sometimes it's only subject to a backdoor referendum, where you can, the taxing district, the board of the local government can just pass an ordinance or kind of say, hey, we want to do this. So we increase it to 0.1%. And then come out on the voters or the voters in the district. Generally to circulate, they get a petition with I think, maybe 5% of the voters that live in that jurisdiction. If they do, then the question goes on the ballot. But if they don't get that file petition within the 30 days or 60 days, whatever that the time limit is, then the limit gets increased to 0.1. So different ways to increase it. Under PTELL, they just look at what that maximum rate could be. So even if it's 0.05 automatically, but if you want to 0.1, you have to go to referendum. Under PTELL, they're going to get 0.1. You don't have to go to referendum. It's just going to be 0.1. Of however you get there, it's going to be that maximum amount. If there is a maximum, which again makes things confusing because every levy is a little different. So that is what these maximum rates are. You see, for this one, for the developmental care, for example, maximum rate is 0.1, and for the county, it's going to be the levy they asked for under their initial request, it would have been a rate of 0.0986, but because of PTELL, it got reduced to 0.0984. That's what actually ended up being on the tax bill or part of it.
So I just.
Yeah.
Is it okay to?
Go ahead.
Okay, this is my county. And the story of our county is in here. Look at that Board of Health. That has a maximum rate of 0.1 and is at 0.03. This is really kind of a problem in our county because it's also largely rural. Right? Outside of the university are farmlands, and we have some new waterborne insects and the diseases that they bring. And that 1.3 million or 1.4 million isn't really going to address that if there's an outbreak. So can the county board raise it? Can they just can they go to 0.1 if they
under this? So this is for the levy year 2021, I believe 2022 levy year for taxes paid in this year.
Yeah.
No, sorry, tax year 2021.
Yeah.
Taxes paid last year. So this is last year,
but
right?
in the future, like this has been a problem since they set it up. It's just not enough money to do anything.
So again, the main limitation of the county is the aggregate rate has to be 0.830.
Okay,
So if the health 0.02, you said it's
yeah,
if that ends up being 0.0304, it can have a maximum of 1, so you have essentially about 0.07. You can increase it. They would have to find 0.07
so you have
in
to
these
take
other
it out of
funds
the
to
mental
reduce
health
it.
board, basically.
What was that?
Take it out of the mental health board.
Yeah.
So I'm not gonna push it.
Yeah, I mean, it's, I mean, when we talk about property taxes.
Or any other.
General fund is, it's.
Well, that argument then is that they get state and federal grants and other tax
Yeah,
districts don't.
yeah. Right, especially in an emergency, so, okay.
So how can you pull out of the aggregate?
We'll get that.
Oh, yay. Okay, sorry for the
No,
interruption.
you're fine. Go ahead.
We have a lot of new boards in our area.
Yep.
And they're levying well below the 0.15. I've always thought that they could only, their budget was set by the initial levy amount. But as I'm understanding from you, if a taxing district says like, you know what, we need way more than we put to the mental health board. As long as they take it from another fund, they could increase it.
Yes.
And then that 0.15, the maximum levy, is that added to the increase in the first year?
No, sorry, 0.1. Okay, go ahead.
Okay, so like, we passed a referendum, does automatically our aggregate increase to the maximum limiting rate? Or is it based on what the budget is, like we want $1 million? Because we could levy $4 million, you know, in a typical township in DuPage, but we're levying $1 million. So do they automatically get that 3 million? That makes sense.
Let me see if I answer your question shortly. And we can go on a little bit more, talk about the referendum options,
Okay,
and then we'll see, we'll talk again.
okay.
Fair?
Sir,
Yep.
what if the referendum set a limit?
Which referendum?
The referendum that created one of the taxing districts, such as the mental health board, said instead of putting the 0.15, they put in a 0.03, or they put out a 0.10.
So let's say 40 years ago, I'm not sure when the act
Right.
passed, but let's say before PTELL, they passed a referendum, went to voters like, hey, we want a mental health board, we want to levy 0.05%. Yes or no? And they said yes. And you've been at that for years. But statute says you could have asked for as much as 0.15,
Right.
but you chose 0.05.
Right.
You are gonna be at 0.05 until PTEL started. Well, I'm not gonna say until PTEL started. This ability to move rates around wasn't part of the original PTEL, but it's been there since I think the late 90s. So it's been there long enough at this point. It's not a new development, we'll say that. Under that scenario, the mental health levy, even though voters only approved 0.05 as the maximum, for PTEL purposes, they can go up to 0.15% or whatever the maximum is under statute, regardless of how you get there. As long as you can somehow could have, again, remove PTEL. If there was some way you can get to 0.15 or whatever that maximum is, PTEL says that's the maximum you can have.
But that would be up to the overall taxing body,
Correct.
not the individual levying body.
Correct. So now I'm gonna go back.
In this instance, the county would make the decision, not the mental health board.
So I'm gonna go back to what I said initially. I'm a tax expert and not into the corporate or the local government governance. And the way these set up, I can see that they're kind of present some unique issues as far as who passes the budget, whether the mental health board passes the levy, and that's just a recommendation, and the county board has a final say where they can accept the recommendation, they can reduce it, or whatever they can do. But yeah, so I mean, the mental health, the levy itself can be up to 0.15 or again, whatever the maximum is in statute. I don't want to say numbers that they might or may not be wrong. But you are still subject to PTEL. And again, in this situation, for the mental health, it's 0.12, it can get 0.15, so you have to get roughly 0.03 to play around with, but you would have to find another levy to reduce by 0.03.
But you wouldn't be the one finding the levy. The mental health board can only control the mental health request. The person making the adjustment would be at the county level.
Yeah, I mean, the governance,
Right.
I mean, again, when the county board itself passes the levying ordinance,
Right.
Again, I'm not sure how much discretion they have as far as the mental health levying component. They can reduce it, but again, or I don't know how much friction there is between the mental health board and say like full county board. But that is something, again, the governance of this provides a unique structure. Like, I mean, when we have a school district, it's a school district that controls everything, and what they say goes. Or what the board, but whatever carries the majority of the board goes.
We have control over our budget, but the county has to balance their budget.
Right.
Can you augment that last statement from the audience? We couldn't hear it on the line. At least I couldn't hear it.
Health boards can create their budget and make that request, but the county ultimately has to balance the budget under PTEL.
Right, so the county mental health board can create the budget, but it's
Make
also,
their request.
they can make a request, but it's ultimately up to the county board to balance the budget, to weigh all the different interests that they have, asking, all the services they need to provide, and they make the ultimate decision as far as what would the levy request for every actual fund would be.
Hey, Mr. Scholten, somewhat different question, but I don't know if you're at the end of your presentation deck. I want to wait till probably going to cover it in a slide, but I do want a discussion of the impact of the new law signed by the governor last year, which validated mental health board referenda that did not have PTEL language. So I assume you're going to cover it, but if you don't, I do want to come back to that.
We'll come back to that question. I'm not covering it directly, but
We can do that later too with GSA.
okay. So it's good. It's kind of go on. Let's see, where was I? I think let's see, like cover all this. So yeah, so you can increase the levy for one fund by 10% and we decrease it by another one as long as that total rate matters. PTEL referendum, this is going back to the rate what the initial levy was. You can go, it doesn't matter what it is, as long as the maximum, we can do what PTEL looks at the maximum rate no matter how you get there. And then, yeah, then the calculator rate, again, you're limited by that, whatever maximum is in statute if there is a maximum. So PTEL, there are some exceptions to PTEL. Bonds are a big one. The bonds are issued prior to PTEL. You can still levy the full amount, however you would do it. And there's a few other ones that are a little bit more specific to different types of taxing districts. And there's about 27. I think the last exception goes to letter Q, so that's what, 18 or so, 19 different exceptions. So there's a whole bunch. This is not an exclusive list. Like one is contributions to firefighters pension fund. So I think it was firefighter protection district, fire protection districts. The General Assembly said, hey, our contributions to the pension fund are increasing by more than CPI, and it's eating into our budget. So they got an exception into PTEL saying, hey, this levy for this fund doesn't count toward your overall limit. Same thing for joint recreational programs for persons with disabilities, whether it be park districts or municipalities that administer that program. It's an exception. And so park districts can kind of operate a part, the park district by itself not big enough to operate the program by themselves, but they can join with 6 or 8 different park districts in the area in order to provide these services, programs. And that, again, that levy is exempt from PTEL, so they can increase by more than CPI a year, again, subject to whatever rate limitations are in law for that levy. Lastly, there's a new one, the refund recapture levy. Actually, that was one levy for Champaign County that that was not subject to PTEL. This was passed last year. Property taxes paid last year in 2022 was the first time it kind of showed up. So tax year 21, first year applied to. As I mentioned before, if a taxpayer gets reduction to their assessed value at the board review of their assessed value or the assessor's office, that doesn't. The tax districts don't have to issue a refund. What happens is the rate gets increased by incrementally because the tax base gets narrowed ever so slightly. If you get a refund at the property tax appeal board or circuit court, that is when refunds have to be issued. And if somebody gets a refund of $10,000, that refund is paid out proportionally by all the different taxing districts. So again, 10,000 generally. School districts are about 60% of the levy, so they're going to chip in 6,000 for that, and then all the other different districts will pay their proportionate amount. This levy is equal to the refunds paid by the taxing districts in the previous tax year. So again, if the thinking of it is, if PTEL said taxing district can levy $1 million, they levied $1 million, and then they later had to issue a refund of $10,000 for assessment lowered by a property tax appeal board. They actually didn't get the levy. They didn't get to collect $1 million. They collected $990,000. So this $10,000 they kind of decided to make them whole, and they get their whole $1 million.
Does that only go back 1 year? I mean, I'm getting refunds that I paid on tax bills in 2003.
Yeah, yeah. PTAB is a little backed up. I think it's probably at the minimum, you probably get a refund or decision issued by 2 years after you appeal to them. The refund recapture levy, it covers all the refunds issued in the previous tax year.
Okay.
So
I'm talking about the other way. They're taking away money from me to give it to refund some property that file an appeal and they've been fighting over it for 20 years. Oh, Cook County is full of that.
Let's talk later. In the cone of silence.
Okay.
Yeah, so in that instance, if you're paying out refunds in, let's say, the 2022 tax year, so you paid them out last year, then they should be reflected in the levy this year should be increased amount. And again, depending on the county or how the unique nature, I would say, whether it comes out of your budget or the county's budget, or the county's clawing that money from you, or how that actually works. But it'll be on the levy for the 2022. The 2022 levy covered taxes refunded in 2021. There we go.
Yeah, but it only looks back 1 year.
It's refunds paid in that 2021 year, regardless of the tax year.
Okay, that's what
that the refunds were generated. So if you had a refund in 2015, or for a refund that applied for the tax year 2015, that was finally paid in 2021, the 2022 levy will have an amount for that amount, and then those will be reflected in taxes paid in 2023. All these years are
Oh, that's
confusing.
so hard.
Yeah, yeah. So it's
Yeah.
just the way it is, and it's complicated. And, you know, Cook County is, they have a lot of litigation up there. I used to work up there, and I know a lot about the different stuff that they do. And I know, like, property tax appeal board, there, you know, there are all those cases, I think, from the 2012 that tax year or so. So it's been more than 10 years. And it's a problem. Because I mean, taxpayers want certainty sooner, and taxing districts want certainty sooner than later as well. And, you know, when we're 10 years out, it makes that, I think it makes the decision of what the value of the property, what the property was valued, or what the value of the property was 12 years ago, and much harder now than back in 2013 even, or whatever. So that's another exception to, again, the funds that are covered by PTELL. And then there are 3 instances where a taxing district, or I should say maybe taxing district is not the best term there, a board can request a separate limiting rate calculation. So the 3 of them are like a village for library funds. So we generally have library districts, but here in Springfield, for example, we don't have a library district. The municipality administers the library. The board library, I think, I'm not sure you can go back to local government functioning on how they're governed. I'm not sure we have a library board or whatnot, how that actually works. But if they do, they can request a separate limiting rate for those funds to be separated from the county as a whole. And the same applies to county or township community health boards, and also boards for the care and treatment of persons with a developmental disability. I will say, this kind of gets, so they have this provision, and you go back to how local government operates. So mental health, yeah.
Community health board is. So developed care 106 there is a 108.
106.
Okay.
So they're gonna ask for a separate limiting rate. So when you're talking about here, this is the rate that matters. They can kind of opt out of that and have their own calculator.
But they have to, right, they have to do that in writing to the clerk.
County clerk, yeah. And
When?
even if they do, I don't know the answer to this question,
Okay.
is at that point, do they have control of their own levy? Or are they still submitting a levy request to the county, who then has ultimate say on what that levy is? So you can have a separate limiting rate, but and skipping forward a little bit, like, you know, this county, Champaign County, they requested there's a little bit more than 38 million. And then PTELL says, hey, it's a little too much. You can get 38.07 million, 30 million and 17,000. So their levy got reduced by $75,000, give or take.
So we'd be out of that.
But if it goes to, and I don't know what Champaign County did last year, but if, let's say they decided we're gonna increase the levy by 3%, if they increase the levy of each of these funds by 3%, you get to the same place. If they decided, hey, we want all the increase to be in the general fund and hold everybody else levy at the same amount, then it matters. But again, it goes back to the relationship between the county board
Exactly. When we
and
started, we tried to address that a few years ago. It really was, it was creating more trouble.
So, this is a little bit into the weeds, but like our township mental health board could write the county clerk and say, look, we would like to have our own limiting rate and not be subject to the township.
No, the DD board.
yeah, I mean,
Or the mental health board, and send it back to the community.
community health. So I obviously I summarized this. I can give you the section there. You know, it says community health board under section ABC 1, 2, 3 of whatever act.
Might not be the 708 code.
I'm not sure. Again, this is not where my venturing, but you know, it's something again, and just because you can request your own separate limiting rate, I don't know, because as long as you can't actually enact your own levy, I'm not sure if it makes a difference. I mean, it might, but
So I don't know about mental health, but I don't think it applies to mental health boards, but for the DD, but when we established the DD board in 2004, we have minutes from a meeting where there was supposed to be a letter to the county clerk to that effect. No one can find it. You know, so it was just getting uglier the more we talked about it, so let it go for now, but
Well,
this is very important though.
Then you could do that at any time, from what I'm kind of
It's feeling so free right now.
Mike, what you see up there for Champaign County,
right,
in your case, it would be Bloomingdale Township is the one making all the decisions.
right, so the
It's
mental
not
health
the
board.
county. So the county
Right,
isn't going to tell the township that they have to do the limiting rate. You
Got
would
it.
have to appeal to the township,
I would think that,
because they're the ones making the adjustment under
You,
PTEL.
I think,
that's what I was.
I think the township board would still write the letter to the county clerk, because the county clerk is the one calculating the PTEL, they're the one doing the math.
Right, but
And then-
but the township is the one making the
The
adjustment.
township, all the governance issues we're having back and forth with the county, when we say the county, I guess, we're generally talking about the county board and not, because the county is right there, well, a number of elected officials. But we're talking about the county board, and we would have the same issues with the township
Right.
board.
But in 4 of the counties around Chicago, community mental health boards are primarily established at the township level, not at the county level.
Okay. So again, that thing is out there, it's been in law for a while, I believe. But I don't. It seems like it'd be the step in the right direction for what you guys are looking for, but I don't think it's the panacea. There's still some work to be done. So going back to your questions overall, these are the kind of the referenda for PTEL of how a county or a taxing district can increase the amount they can levy more than the CPI increase that they're allowed. The first one is to ask for an increase in the extension limitation. Again, instead of a CPI increase, they can say, hey, we want 6%, we want 7%, and they can say it for, I think, about 4 years. So we want a 6% increase for the next 4 years. This gets put on ballot occasionally. This is not the most common way that a PTEL referendum, or for a way, not the most common way a taxing district asks for more money, if you will, shorthand. It's kind of confusing because you're asking for 6% opposed to CPI. Or it could be 3%. If CPI is low at a time, you could be asking for 3%. But you might know what CPI, you're gonna know what CPI is for that first year, but you're not gonna know what it is for the future years. So if you're asking for 3% and CPI in year 2 is 4%, well, then you actually ask for a reduction. So I think that's one reason why it's not too common. Increasing the limiting rate is the most common way that taxing districts try to go to voters to get asked for an exception from PTEL. There they ask for, like, hey, we want a limited rate of 2%. And then there's language on the ballot, and it shows how the vote tells the voter, like, this 2%, over 1.9%, for example, this 0.1% would result in a tax increase of $100 for $100 house, or whatever the number is. There are still problems with this one in my mind. More so in Cook County than everywhere else. In Cook County, we talk about how the overall system, it takes a lot longer from start to finish. In the Sangamon County, for example, their tax bills are calculated right now, and they know what it's going to be for the entire year. You know what the tax rates are. You know that. In Cook County, the bills were already due, but the first installment is 55% of the previous year's bill. They don't actually have the tax rates and everything until the second bill is issued, which can be anyway, August, September, October, November, somewhere around there. And that once the rates are issued, then they apply that, like, hey, here's the rate times the property value, and then subtract what you paid in the first installment, and that's what your second installment. So the installments aren't actually dollar for dollar, and never, very rarely will they be equal, whereas downstate, they actually are equal. So because of that timing issue, taxing district can ask for a limiting rate, put the question on the ballot, and they don't know what their new EAV is going to be. There's been two situations, or two ways this can kind of go wrong, if you will. One is the taxing district underestimates what the EAV is going to be. It's a reassessment year, and they ask, hey, voters, we want $1 million. So, it would result in 0.1 rate or whatever the actual number is. And then the taxing district, informs their voters, okay, this is what we want to do, I'm gonna use a school district example, right? We want to keep our arts and arts and music programs. They inform the voters, they approve, and then the new AVs come out and it increased more than they anticipated. Instead of generating $1 million, it generated $3 million. And that $100 tax increase turns out to $300 tax increase per person, and the voters kind of feel burned. And that tax increase is there kind of, it doesn't have to be forever, but it's usually there forever. So they kind of, there's some bad blood, I guess, after that, or bad will, lack of trust. There's another taxing district that did this when this has been like 2010, 11, 12, somewhere around there, kind of when property values were decreasing. They asked for a higher limiting rate than they had. So again, we want to save the music and art program. Went to referendum, it passed, and then the EAVs in that district dropped. I mean, they dropped everywhere because of the housing crash. And with PTEL, we saw the different rates. When the EAVs drop, rates are going to go up automatically to offset that increase. Well, the rate that they asked for was lower than the rate that PTEL that they would have had under PTEL if they didn't even go to referendum. So they actually went to referendum, asked for more money, and ended up getting less money. They went to the General Assembly and got an exception, say, hey, for our school district, we actually get a rate of, or a rate that generates this, so they get the money. But there's some of the problems, at least in Cook County, that happens when you ask for the PTEL referendum for this, again, this limited rate, because you don't know what your EAV is going to be when the tax, when it actually applies. Next is levy for a new fund. So these are for funds that the taxing district has never levied, at least not levied in the last 3 years. So I think this is the issue that some of the mental health board, I'm not sure exactly which type of board that had, where they, instead of utilizing the PTEL language, they utilized the language that was in the Mental Health Act, or the board of the statute that created the board initially. We had kicked out, and then there was an Illinois Supreme Court case on this back in 2008, somewhere around there. There's been an issue. I think that was Will County. I think that was I can't remember what kind of board that was, what kind of taxing district that was. But there was an argument, like, what is new rate, right? The argument is, what is new? The taxing districts took the position that new rate means any rate that is passed after PTEL by the General Assembly. So that's new. If it existed since 1960, 1950, well, that's not new. The taxing district didn't utilize it. It's not new. The Supreme Court said, no, new is any rate that the taxing district is not utilizing. Or again, for the last 3 years. So again, I said before, if Champaign County wanted, they could just put all the money into the general fund and not have all those 12 different rates. However, they could run into an issue like this. We have them levy for 3 years. So I would probably advise, don't do that. I mean, there's a number of reasons why you wouldn't do that. I think, I know, like Springfield, in their municipality, they have their entire levy into a single for the, I think for one or two for the pension fund payments. But again, they're home rule municipalities. They're not subject to PTEL anyway. So sometimes some taxing districts do something quirky, again, based on the laws that govern the taxing district, what percentage of their revenue is from property taxes. And then finally, the other one is to ask for a debt service extension base if you want to be able to issue more bonds. That's one way to issue more bonds. And these are the only ways that taxing districts that are subject to PTEL can increase property taxes over the PTEL limit. Again, I'll say this exception, but there are probably funds, I know there are funds that are outside of PTEL, they got exempted, and those funds, you utilize the statute, the old statute, right? They don't, PTEL doesn't apply to them, so it's confusing.
Question about citing the law on that. Is there something after the fact that we can post to the chat or something? Is there a law?
The law that was passed that.
I think they're referring to that. The validation.
Oh yeah.
Well, I think, Brandy, are you on the line there?
Yes, I had the question about for when you want to get out of the aggregate, can you cite the law on that at some point?
I can email it. I can email it to Jody.
Perfect. Thank you.
I don't have that one set off the top of my head, but yeah. Yeah. So we go on. Again, this is, once again, the Champaign County, again, here's the maximum rates that we talked about before, what they are. There's other stuff around here about TIFs and enterprise zones, and we don't need to go into all the details unless you really want to. But again, here are the PTELL, kind of the definitions that we talked about that go into that formula. That's where they're from. We talked about already some of the exceptions to PTELL, the 5% CPI increase. New property, again, you have a whole new subdivision or any new construction, you're gonna get an increase more than CPI just for that. Taxations, we covered TIFs, the TIF increment that is part of the taxing district that is no longer in a TIF because the municipality actually let it expire. And that off chance that actually happens, you get that money back, or that money, that tax, that EAV goes back on your tax base, and you get a bump because of that, or you kind of go outside referendum, outside of all that, and you get a referendum passed. And I guess, or just, have a fund not subject to PTELL in the first place. Going back to, again, we talked about the exception of the different taxing districts, the mental health board asking for a separate limited rate. It goes back to local governments, and if the county gives everybody a 5% increase this year, it's not going to matter. Again, if they have the final say, the thing I can think of maybe makes the most might make the instance where it make the most sense is if the county actually asked for an increase in the limited rate or a new fund, and he said, hey, this rate, we're going to ask for more money, and it's going to be for the mental health board. If you didn't specify a levy increase, right? If I was the county, I can go, hey, we want to raise taxes for mental health board 0.1% or whatever, how much more leeway I have, and I get that increase. I could do that and need to fund the mental health board for 1 year. But in year 2, I could, actually, we don't have the resources for that. We need more money for police or fire or the sheriff's office or whatever it may be. The county could then reduce that. Again, at that point, that 0.83 or whatever the maximum rate is, they went to the voters and got an increased rate after that. So they kind of play a little switcheroo. But again, going back to the taxing districts and Cook County, some of the, you don't want to mislead voters, I would always say. I don't want to give any ideas to any county or taxing districts out there.
That wasn't us.
A question we often get is whether PTELL works. Like, this is done in 1991. First by the counties, property taxes were increasing. They were high back then. And if you go to any legislator that goes knocks on doors, they say this is the issue that comes up the most, even though legislators don't actually vote on property taxes. They vote on the system, but they don't actually have a say in how much the school district or a county collects. So these are for the counties subject to PTELL. The percentage of the taxing districts whose levy was reduced because of PTELL. So again, for the example we gave, I had before Champaign County, their reduction was like $75,000 out of their $38 million budget. So that would be that's not even 1%, right? That's like 1/3%. But they would be considered part of that 68,000. Sorry, 68 percentage points. One thing that the critics will say about PTELL, I think this is probably more right than not. I'll say, when we talk about property taxes, Illinois is a big, diverse state, right? You have Cook County, the college suburbs, 75% of the population lives up in that general area. Majority of the property value is up there. We have downstate, which is a lot different. And even within Cook County, you have the south suburbs, which are a very different situation than the northern suburbs of Cook County. So across the state, things are different counties sway differently politically, which can have a result in this as well. But I think a lot of taxing districts view PTELL and what the limit, wherever the county clerk says, hey, you can get this 5% increase. They view that more as a floor, not a ceiling. They say, we should probably get that 5% increase at $1 million, at $50,000, because if they don't levy it in year 1, they can never really get that money back, right? So if your initial levy is $1 million, and you have a 5% increase each year, right? You can do 1 million, 1.05 million, then 1.10 million, 1.15. if you skip year one, you hold the levy flat to 1 million. And then you do 1,000,005 and 1,010,000, well, that's the maximum now. Before you could have levied 1.15. So that $50,000 you gave up in year one, you're actually giving up in every year thereafter. I don't think, so I think counties that are not subject to PTEL, they probably have more freedom, so they have to make that decision of how much to levy, make that decision, it weighs on them a little bit more. I think they give it more consideration, whereas counties subject to PTEL, they can just kind of point to PTEL, like, that's the maximum we can have, that's what they say they can have, we can have.
Sir, and
Yep.
In some ways, though, this may not be measuring whether PTEL works or not. My township, I've been there for 10 years, and their standard operating procedure is there is no property tax increase, period.
I have a question for you. When they say no property tax increase, you mean the amount they levy, the rate
I
that
did
is
not
levied?
get an increase in the levy.
Okay.
In fact, they've decreased it twice when they've shifted it from my department to another department on the list of those commissions or whatever that can levy. So they go back to the voters and say, we have not increased our levy at all every year. And so did PTEL work in that? Someone could say, well, I didn't get a decrease in my property tax, PTEL isn't working. Whereas the township already decided your property taxes are not going to increase at all. And if and they look at the school district as if, well, you're penalizing the property holders, the taxpayers, 5% every year after that, if you put in a 5% increase. You're just automatically going to inflate their tax bills.
I would agree with everything you said, and this is not. I don't think there's a great way to measure whether PTEL worked or not. You're going to have some taxing districts. Again, there are some that didn't levy the max, that maybe they held the levy flat. And did the PTEL work? No, because they would have held the levy flat regardless. PTEL is designed more for a taxing district. The reason I asked when we're not going to increase property taxes, different people have different definitions of what that means. There are plenty of taxing districts or local government officials that will take a position. Last year, the rate was 1%. This year it's 0.95%. We reduced taxes by 5%, even though because of property values increased by more than 5%, they're getting more money back, but they'll still say that they cut tax by 5%.
Right, or there's new developments, there's new property that came on board 2 years ago.
Yeah, completely agree. And so there's a lot of ways people can finagle their way into what, I think for a governor's race 5 months ago or so, Darren Bailey, he was on the school board, and one of the attacks that Pritzker levied against him was he increased the school board levy. He raised taxes by 70% or something like that. And he was on the school board for 10 or 15 years, and they had an increased levy. So well, it's 70%, but it was over 15 years. And obviously, Pritzker's not going to say that. But and that's the way. One way to measure it, the actual increase in levy or rates, and it's different ways. So this is not by any means an endorsement, or it does or doesn't, but I think it's just interesting because sometimes people say, hey, that 91%, the school district, look at all that money we saved. And the Department of Revenue has the amount of total reductions in the levy due to PTEL. Like for the county, for Champaign County, we talked, it was like $75,000 of their $38 million budget. Again, my guess is they knew what the assessments were from the overall assessment. They levied the maximum. They figured out what the maximum amount is, and then there were some reductions at the board of review that produced a little bit lower. But I mean, that's kind of I don't think it works. I think it probably has the inverse relationship, again, creating more of a floor for property taxes for taxing districts than maximum. I mean, again, school districts, they're 60% of the tax base. That's what we always focus on. I mean, other taxing districts are mere slivers of the entire bill. This other one chart, again, this is very unscientific. I'll say that to begin with. The red line, you can see that's the increase in each year in the levy, the percentage, percent. And the blue is the CPI for that year. So you kind of see, at least in the initial years, there's kind of a big gap. I think a lot of that big gap had to deal with new property in Kane County, Kendall County. In the early 2000s, those counties were booming. There was a lot of new construction. And then the housing crash happened, and then there probably a little bit more pressure on taxing districts to hold taxes or not increase it by as much. And then you have an increase again in 2014. The 2014, that also coincided when we had our previous governor Honor took office, and there was a budget impasse. I'm not sure. I don't know whether that dramatic increase was because he was trying to serve local governments and serve all the different entities from taxes. So they want, like, hey, we're not getting the tax money, or we're not gonna get state money, so we're gonna levy as much as we can through property taxes in order to help, you know, fund for the service that we do. But I have no idea again if that's the cause for that spike. It just happens to match up. Correlation, causation, I don't know. So we talked about this before. Again, this is something that passed last year as to try to avoid the problem with PTELL, or taxing districts are incentivized to levy the maximum amount. It applies to schools, park districts, library districts, and community colleges, so not counties. I'm not sure why they didn't want to be part of this, but they didn't. And basically the law says, in a nutshell, that the rate should increase, the maximum amount of the levy should be increased each year, regardless of what the taxing district actually levied. So they don't have to levy the maximum amount for that rate to grow. So if they want to give up, like in our example, to $50,000 in year one, they can. And if they want to claw that back and go to 1.1 million in the second year, they can. There were some concerns about this that, you know, in your example, your township, they will have a levy for 20 years. You have this, then you have a new administration come in, and they can have the 20 years of back taxes kind of spike all at once. I was like, my thinking is, there's always this balance of trust between the General Assembly and local governments. And there's plenty of that back and forth, you know, and there's bad examples, bad facts make bad laws. That could happen, but that taxing district is subject to the voters. They're going to be up for election in a couple of years. They really don't like that. So one of the things they did to kind of prevent that is limit to a 5% increase per year. But like this year we have 5. So let's say this just happened. This just passed. We have no real data on it yet. But imagine this passed back in 2000, and now inflation is high. Cost of services is going high. This is when taxing districts, you know, we foregoing revenue before this when we need it. It's only 5% limit per year, but they're getting that 5% limit because of CPI anyway, so they can't even access all this money that they had previously, I guess, foregone. So I think if they want to put some guardrails to kind of protect the voters from the local governments, I think there's too many guardrails that local governments will continue to levy the max and it won't actually do anything, but we'll see. I mean, I guess in your township, even if they continue to levy the same amount, it'll apply to them. And,
Right, yeah.
And whether that's like, oh, well, might as well levy taxes, somebody else will levy in the future, or whether somebody in 10 years will take over and have that, we'll find out. So good to know there's, you know, I mean, again, back to percentages, there are taxing districts that will be affected by this, and I don't know how it's going to play out. For PTELL references, these are probably the two best out there. The Department of Revenue, again, Department of Revenue, state agency, they don't levy income taxes, or sorry, levy property taxes, but they do administer them. They have a technical manual that they put out a number of years ago. They don't update it as regularly as they should. I'm told that they are going to update it. It is on their list. It's on their to-do list after that aggregate extension limit passed to try and add a section in dealing with that. And that law is kind of mumbo jumbo, even to me, that has done this for a while.
Excellent reading if you need a nap.
I agree. And then the second one, PTAX-60, that kind of has a list of all the different types of local governments, all the different types of levies that they can extend, that they have, and has a statutory reference as well, and a maximum rate. I think even maybe like a parenthetical as far as like how they can raise it, whether it's back to a referendum or direct referendum and stuff like that. So those are the two that I would recommend, and that's all I got. So if any questions that you were asked before that I did not get to, didn't cover, feel free to ask me.
Sorry, I had to step out. Did I miss the part about the aggregate?
mental health board can get out of an aggregate.
Yeah, we talked, they can file a letter with the county clerk. They can have. They can have that, but the problem is, the county board still determines the actual levy extension. So. If the board, the mental health board passes that, writes that letter, you would still have. A budget request to the county, and then they still have the authority to either accept that or reduce it or increase it if they wanted to. So I mean,
But we
it's,
would be part of the aggregate.
yeah, but if. It goes to if, when the county board has been increasing levies, and I'm sure everybody has a different experience. This year, I mean, that year for Champaign County, I don't know if Champaign County increased each levy by, I'm not sure the previous levy was, I mean, it's said on there, you can probably do the math real quick. Let's assume it was 3% increase. I'm not sure if they increased 3% across the board, or whether they increased certain levies by 10% and then held other ones constant in order to get that increase. I'm not sure how, I'm not sure they, does that make sense when they had an increase? I'm not sure how they, so if they did a 3% increase across the board, and having a separate limiting rate, I don't think would do anything. If they held that levy flat and increased the general fund by 5% or whatever, then that would be beneficial. And I don't, every township, every board, I'm sure has a different experience as far as what happens.
They did the same, because we had a discussion around the time we were looking for the letter. We had a discussion about what are they? The zones that don't pay tax. What are
TIF.
No, not TIF, it's the other one.
Enterprise zones?
Yeah, the enterprise zones. Like, we could have opted out of those, and they were sort of saying, why would you do that? You know, it's because they were doing it across the board. And I think it was 5%.
Yeah, so I should know more about enterprise zones, but I think there's an abatement and then there's a reduction.
It's the abatement, the enterprise abatement.
Yeah, so that's when the taxing district, and let's say they levy $1 million and they vote on the abatement and they decide to, it's 5%, $50,000, just not to collect that $50,000 from those property taxpayers. The rate and everything else is kind of done the same. It's just on the collection side that when that tax bill goes out, their tax rate is reduced by their normal tax rate would be 9%. It would be reduced by all the taxing districts that decided to abate their taxes. So they might have a 0% tax rate or 1% or 2% or whatever it would be, and then that would affect the money that the taxing district collects.
Yeah. And we had historically opted out of those stuff. I think you're right. It sounds pretty well anyway.
Any other questions or anything online, or?
I think we've got all the chats.
Just a question of clarification.
Go
You
ahead.
were saying earlier about your unit of local government, if you're a taxing authority. So since we're in the aggregate, would you consider mental health boards taxing district, or which would then, it would satisfy the question we've always had, is whether or not we're a unit of local government or not?
I've always been able to escape making my own definition of local government and utilize others' definitions of local government. I imagine the census, for example, has a broader definition. And I imagine there's a good possibility they consider you a unit of local government. I don't know the exact definition.
Mental health access was special.
And the state constitution makes a reference to defining what local government is too, if I remember correctly.
Probably.
Yeah. She has a number of grant applications. Sometimes the county has to be the applicant because the board's not recognized as a unit of local government.
Right.
So.
Our auditor recognizes us as a subunit of Lyons Township.
Yeah.
Special.
Well, they appoint our board, so that's how the auditor uses it.
Right. I mean, it could be whether
And they set the levy, yeah.
a definition could be, a board that is, elected by the constituents, whatever. And then you use that definition in RTA and CTA and Metro and Pace. Those are not, none of those are local governments. And I'm not even sure. I mean, I don't know what to call those boards, right? I mean, those are giant We talk about they have, you know, budget of $1 billion. Their boards are appointed by mayors and other county executives and whatnot.
Right, or port authorities or other things like that, yeah.
I mean, it's a tough question. I mean, you go to pension boards, right? You know, some of their trustees, some are appointed by the municipality and others are elected by the members of the pension system. There's plenty of different entities of these things, and obviously plenty of times the county will create a task force, and nobody considers a task force, you know, the local government, but what, you know, what's necessarily, you know, where do you draw the line? And it gets messy, and I'm glad I don't have to come up with a definition.
Thank you.
Yeah, that's a very hard.
Well, thank you for having me again. Hope I cover the topics. I will send you the site for
Good.
Yeah.
that thing, and your attorneys can read into it, and as far as what it means and what benefit or pros and cons of doing it, because then I don't really know the details of that or experiences of different boards that have tried to or have opted out, and whether it's a positive one or negative. All right.
So are you staying with us?
I can.
Send the citation.
Yeah, for the new rate case. Yeah, I think it was, I remember, I think I know the name of the case, but I can find that, I can get that site for you.
Well.
Whatever.
Thank you.
It's such a hard topic.
I actually have to talk in 2 minutes after. Okay. So, and you can sit up here if you want to. Are we taking a break? Oh, you don't want to take it out. It is kind of embarrassing. I have. So anyway, yeah, you can sit up here if you want to when you come back. All right, so we're not taking a break. 5 minutes. 5 minutes, okay, and then when we come back from the break, it's GSA. So we're in a minute. Oh, I think that's good.
I'll do that.
From Chicago. Yeah, I don't, like, we're not just talking about. We just, for the last 5 or so minutes, we kind of make the point. I look it out. Very majority So now we settle that, just like.
Our next. I remember, the public board is still lost. So back in.
It's one guy. Just, I mean.
Not sure. And then the IHA with the.
Yeah.
And they got- and I was on staff.
So they all looks pretty good.
Yeah, it's the way they can get.
Is that the top of the line? Have leftovers?
Well, it's, they purchased it and at that time. They had.
Oh, right. I got it.
Yeah. Yeah, it's the big line.
Nice.
Right, it's like, it's gonna pick them up, it's really long, plug it into the computer.
Yeah. And so like this room.
Yeah.
You're having like. Yeah. I mean.
Cool. So much to learn.
Yes.
Well.
Because the world. Yeah. You're healthy.
That for statute. When they talk about community. They talk.
My number 5643, you can do that, right? You submit the living right. Would you pay them? We can give it Chinese. Because they use. That's supposedly. That's where. We have a lot of trouble trying to do. It's still very scary. And did you hear that they? Sheriff's. You know, they could do. That, those guys, I don't care. I don't care if I can enjoy this. Look, the innovation.
And you can, if you want to sit on the end to it. It looks like. No, I think this is the only one that. So I'll just put it and turn it on. I still didn't. So you never know, one of the people on the Zoom asked about the validation of it.
Yeah, we're not talking about it right now. That's not today's conversation.
Could you answer it for you? I had told him to wait till you were here. I can answer it if you don't want to.
What do you think is next?
They want to know what was the effect of the validation.
Right. So that's, I think we have our opinion. Yeah. But I'm curious as to what, what they. And ask them.
Okay, yeah.
Well, look, okay.
Uh-oh. Okay. Welcome back to my birthday party. Part two of the party. We got all warmed up, talking about property tax law. That was exciting. There's one question that came from the remote group that hopefully we'll get to during the session. That was the impact of the Validation Act from last year. They're chatting a little bit about that right now, but anyway.
I'm somewhat familiar, you're probably more familiar with it.
Okay, bringing Maurice back. And then also introducing Maureen Mulhall and Matt Loney from Government Strategies Associates.
And I've asked you to chime in on it because as an association, we have an opinion of what it does. But we'd like to hear your opinion on what the validation legislation does.
All right, my illegal opinion, if you will. Without, I read the statute, it's been a while, I reviewed it, I did not. As far as what the different opinions are, the way, this is not the first time the General Assembly has validated a statute.
Right.
Or validated a levy. It's been done before. My understanding, the lawsuits are different, I guess, a little bit of background, I'm guessing what happened was a rate lawsuit was filed. That's essentially a class action of taxpayers filed a lawsuit saying, hey, the county levied this tax. It was illegally levied because they never got the proper new rate approval. The courts said, you're right, that is a new rate. Illegal levy. So if you had previously generated, let's say $1 million in a tax year, the county was then required to issue a refund of $1 million to, or whatever the proportionate share of the levy was for the taxpayers that actually filed the suit.
And so this was a preemptive strike so that those three boards who were affected would have coverage in the event of a lawsuit.
Okay.
So it was designed as a preemptive
Okay.
strike.
Yeah, so I'm not.
But otherwise,
yeah.
you're describing, you described the situation we're trying to avoid.
Right, and I have no idea of the actual specifics. I just read the legislation and use my kind of a detective hat and figure out what's going on and been around long enough to have seen different problems and whatnot. My understanding of what the rate validation would be any of those, that initial rate would be deemed legal essentially. So if the levy was again $1 million, it would be for whatever tax years, it would get a stamp of approval and it'd be part of the base, the levy, whatever going forward as well. So it wouldn't be that just those years are effective, and after the legislation was passed, you're kind of back to square one. You have to pass it again, and it's kind of it'd be as if those levies, the initial levy when it was first done way back when, as if it was done correctly.
Yeah.
That's my guess of how.
So Mark, does that answer your question? If you're still on the call?
Yes, I am on the call. Thank you. That begins to answer the question. I don't want to dwell too much on this. I can take this offline or tomorrow, but obviously I'm from one of those mental health boards that was impacted when the county clerk refused to extend the taxes from the referendum for 2020, as well as Elgin Township. And there were two other mental health boards that were at risk, but they were not impacted. So I do appreciate the explanation for now. We passed based at a 0.15 per the Community Mental Health Act. So basically what the Public Act 102-0839 did was that it validated that passage, though there was no PTELL language on the ballot. And then we can still go as high as 0.15 in subsequent years for recommendation for funding for our mental health board. Is that an accurate from the first presentation?
I would add that up to 0.15, but you're still subject to PTELL going forward. So if property values increase by, let's say 10%, you're not going to be able to continue to levy at a 0.15 because that'll be a 10% increase in your levy. Your levy would be able to increase by the lesser of 5% or CPI, which if it, back to $1 million, that'd be 50,000. So if you're still subject to PTEL. So you're not exempt from PTEL going forward.
Okay, now that's the community
Legal.
mental health fund levy portion of, because in our case, it's under the general town fund levy, but it's only for the community mental health fund portion of that levy.
Repeat that again.
Okay, our community mental health fund levy is through the general town fund levy for our township. So we don't have a separate line item on the tax bill.
Right, but you have a separate fund within the township.
Correct. So it's the separate fund within the township that's still under PTEL for the mental health board's discretion.
And I would go back again, it goes back to the governance between the mental health boards or whatever board it is and the higher unit of local government would be the township or the county board. From everything you gather, like I'd say you make a budget request or a levy request that is incumbent on the township board to either accept that request, they can modify that request. And I guess if you guys ask for a 0.15% increase in essentially the limiting rate, I guess if you would have used the proper PTEL language, it would have increased. You would have asked for that and the limiting rate would be increased by 0.15%. But going forward, the township could increase the general fund by more and reduce your budget by whatever percentage. And you have the language in there that I'll send to Jody that you can request a separate limiting rate that may or may not limit the township's ability to reduce or change your budget, I guess, best way to say it. Makes sense. But bottom line, you're still subject to PTEL.
Okay, and let's leave it there for now. And any follow-up I can do through ACMHAI and through Jody. Thank you.
I do have one other question, because I know our township has a separate line item in my tax bill for the mental health board. Is that mandatory or arbitrary on the part of the township to have a separate line item since it is a separate levy?
I don't know. It'd be interesting to see whether.
Probably a question for the clerk.
Yeah, it would be interesting to see other townships in your county, whether it's there as well. I mean, the clerk, not all the tax bills look exactly the same. Some are more complicated than others. But
Anyone who complains to me, I say I pay $18 a year. I can take it to McDonald's with the money, or we can put it towards mental health, So
You make it real. Okay, moving on then. Can y'all hear me without a mic? I have a pretty projected voice. Because we have so many new people today, we just wanted to spend just a couple of minutes giving you some background of Matt and I and where we and how we interface with ACMHAI. So my career in legislative affairs started in 1981, and I remember when PTEL passed. And at the time, I was working for a state agency, and I told myself, oh, you don't have to pay attention to this because it doesn't apply to you. Man, was that a mistake. And coupled with, living in a county that isn't a PTEL county, I'm like, I don't need to know anything about this. And, I'm still playing catch up on my learning curve. So I started working with state agencies as the legislative liaison in 81. I've spent 5 years at public aid, almost 5 years at professional regulation, a year at Capital Development Board. And then in 95, I joined what has become Government Strategy Associates. And I've worked with ACMHAI since 1995. And so as I saw some of those exceptions to PTEL, I remember when those got put in, and we have McHenry County to thank for those. If I remember, we had a very active
board president or, board president at the executive director at the time, who was kind of progressive in his view of where you're like, Dennis Smith. And we made several changes based on recommendations from McHenry County, and I think the DD language was one of them. Matt, I will let Matt speak for himself as to his pedigree.
Sure. So this past year, I celebrated 30 years in running around the halls of the Capitol. I started out on staff for the Illinois House of Representatives. It was issues development staff. So talk about a generic term that you could utilize for. But it was communication. Also, what it really taught at that time was try to learn perspectives of every issue. You think that is one side of an issue. No, there's multiple, and try to view it from all sides. And we would be assigned different legislators to work with, and I would be assigned to someone from the city of Chicago and then someone from downstate. Well, there's a piece of gun control legislation, and you're writing two press releases, one saying this is needed, it's going to save lives, and then the other press release is saying this is taking away rights. But it taught perspective on also just the diversity of the state, which is just, I still marvel at and fascinate about it. But also the legislature is reflected in that same diversity in terms of the backgrounds of individuals that were that are a part of the legislature. You know, people have this perspective like, oh, they're all lawyers, and that's certainly not the case. One of the a long-serving leadership member in the Senate who retired a while ago. You look at he was in leadership. Look at his bio and his education, Chicago Barber College, and that's this Lou Viverito from Burbank, who is very capable, wonderful legislator. So I worked on staff for a couple sessions. Then I worked for a series of nonprofits for the YMCA Respiratory Health Association, which used to be the American Lung Association. And then I've been working with Maureen and Government Strategy Associates and working with ACMHAI for the last few years. So it was, I started with Government Strategy Associates, and then shortly after I start, we go into COVID, and that was, quite a unique experience in terms of especially learning more about the inner workings of the administration, getting, what's an essential service and not, and things. And just how the legislature has tried to adapt and govern through COVID. So last year, they started to come out of COVID, but the Senate still required a negative test before you could see senators. So they went from hiding from COVID to hiding behind COVID. But this year, the legislature is back in session, things are normal. However, the Senate, physically, the Senate is under construction. So half the Capitol is under construction. So I don't know if anyone has driven by the Capitol, but in front of the Capitol, there's a massive hole, a block long in front of it. So they're building new underground parking, but it makes everything messy, inconvenient, and expensive. And
hard to find.
Hard to find. And some have said that, well, that's what state government is this year: messy, expensive, inconvenient, hard to find. But we're managing. So moving on to how the legislature is sort of operating this year. It's been a series of fits and starts. They convened in January. That's when they always convene. And there's a lot of new members. Well, what they did was, in the past, typically they convene, they do a kind of an organizational meeting for all of the committees. They didn't do that this year. They just basically did nothing for a month and then said, all right, our committee deadline for bills to be out of committee is in 2 weeks. The first of those 2 weeks, they did almost nothing. And then it was like, cramming for finals time, and legislators just had no idea what was going on. And it was a lot of bills we're going to pass them right now and then fix them later on.
So when we talk about bills in committee, just from a perspective of, again, where we interface, bills get introduced daily, and in odd numbered years, the sessions immediately after an election, when you've got a lot of new members, those new members come in with a lot of new ideas, some good, some bad. And this year generated close to 7,000 bills. And so Matt and I go through that daily introduction of bills, review the synopses, and extract out those bills that we think will have an impact on ACMHAI. So we look at things like PTELL legislation, anything that would affect the governance of your board, including like changes to the Open Meetings Act or things like that. And then, of course, all of the DD and mental health and substance use bills, of which there are hundreds. And then from that, we generate a list that the legislative committee reviews. But literally, when you're looking at 2 or 3 weeks to get 7,000 bills out of committee, most of them don't get called. Or in the case of shell bills, these one-line bills that are there simply in case you need a bill.
And the subject could be a bill dealing with counties and townships, and that's the limit of the subject. So we have to watch for amendments that get put on.
And that becomes the next phase of the process. So we're doing that grunt work on your behalf, and then counting on the legislative committee and working with us to develop the position that ACMHAI will take on those. In our case, we've probably got about 50 bills that we're more seriously tracking.
Right, and just in terms of the operation of the legislature this year, we have a different group that we work with that a legislator had a bill. She said she wasn't going to call it for a vote and move it forward. We're watching committee and she was getting her papers together and like, House Bill 2335, and she said, yeah, we're going to call it for a vote. It passed on a partisan roll call, and I saw her afterwards. I said, I thought you weren't calling this. We were holding on this and having a discussion about this. She said, I just wasn't organized. They just called my name and then it moved forward. Now, it hasn't moved forward since then, but that's just an example of, again, these fits and starts in the way the legislature has operated this year. In terms of timing, so the legislature is going to be done in a month. May 19th is their adjournment date. That tells me they're going to be done probably in the wee hours of the 20th. Deadlines don't mean anything, but no, they enjoyed being home early last year. Normally it's May 31st. In terms of the budget, the revenues have been higher than expected. And what the state has done with some of that higher than expected revenue, and this is not the federal money, this is other revenue, is they've earmarked additional money to the state's rainy day fund. So it's now at $1.2 billion. When 5 years ago, the rainy day fund, I believe, was at $67,000. So, you know, that's literally raiding the kids' piggy bank if you want to pay your mortgage. And I know the comptroller has urged caution in terms of new revenue. Let's spend it wisely. Let's not start a lot of new programs and a lot of new spending that next year or years down the road, we're going to have to continue to fund or find money for. The state also earmarked $200 million more to the pension systems. And the credit rating agencies have taken notice. So in the last 6 months, there's been 2 additional credit rating increases for the state of Illinois. So I think that's been 8 in the last 4 years. Before we go out having a ticker tape parade, I think Illinois is last or second to last.
Yeah, we're still
We're still near the bottom.
doing well.
It's like, me being the tallest in my family at some point. It's not that much. But,
So I want to interrupt on that good news note. The General Assembly has a commission, the Commission on Government Forecasting. And it's a bipartisan commission. It's, I think, pretty generally well regarded. And yes, revenues have been up, but when they're projecting into the next 2 to 3 fiscal years, there is a cliff. And that's a lot of the reason why both the governor and the comptroller have really urged caution in this General Assembly so that they're not committing the next one or two general assemblies going over the cliff to getting us to a place where we're going to be at 120-day payment cycles and, you know, things like that. So that's the caution that's out there.
And I think, you know, that there's been significant turnover in the legislature. In 15% of the House of Representatives, brand new, 15% in the Senate. And I think there's a little more fiscal responsibility in these new members. There's, you know, a little bit less restraint, or more restraint rather, with the spending, but also like they recognize that putting this money away is good. You know, we don't want to, they look at the pension debt and see that we don't want to repeat those problems of the past. So that's good news in terms of their approach, and they're kind of pushing leadership. Leadership is not saying, you know, we're going to spend like crazy. So the reason that there's been, part of the reason for the significant turnover is there was a remap. So every 10 years, there's a census and there's a new map to reflect the shifts in population. And with the remap, you'll have legislators that say, listen, only 10% of my old district is in the new district, or 25% or whatever. And they just don't want to either move after the election or campaign in the new area. So that contributed to the shift. If you look at how the districts are drawn, and it's really entertaining to look at how the districts are drawn, it looks like they were done with an Etch-a-Sketch that someone dropped. But also sometimes you can see there's one street that takes in one block, and you're like, okay, someone lives on that block. So the Democrats drew the map, and by news accounts, they were quite vicious in that, in terms of mapping Republicans together. And it's the biggest tool in the political toolbox in terms of how one party control can take over or can utilize to their advantage. And the Democrats saw an increase in their super majorities, meaning they have more than 2/3 of each chamber because of these new maps. And in other states, it's done by, you know, Republicans are in control. So that's, you know, whatever editorial boards or anything like that, the party in power is not likely to give up that control. So there was significant turnover in the legislature. And what's interesting as far as again, talking about the diversity of Illinois. So like an iron worker, a violinist, an anesthesiologist, a railroad engineer, and a firefighter walk into a bar. But no, that's actually some of the occupations of the new legislators. So they have a lot of fascinating background, but that also means they also don't have a lot of background on our issues or on other issues. They may be focused on certain things. So the legislator who's an iron worker, he's from Will County. I said, over break, what are you going to do? Are you going to do district work, or are you able to go on vacation? He said, oh, I'm working on a bridge. You know, so I thought that was fascinating, but they just have a completely different perspective. I mean, a professional violinist, that's neat. I think another occupation, but.
Well, and then in addition to that, diversity of occupations, we've got a legislator who actually got his diploma from college last May while he was campaigning for the primary election. We have two legislators who are 23 years old. And so their world and life experiences are just really beginning. And I'm interrupting Matt, but I am compelled to on that note say that's part of the reason why your task is to really get to know those new legislators, because you know, we all work with PTELL and we're scratching our heads. Think about that 23-year-old who is actually, I think, in a PTELL county and is learning not only PTELL, but how the state budget is crafted, and you know, what is mental health and why do we care, etc. So there is an urgency for you to get to those new legislators. And I would speak in terms of not just the new legislators in the current General Assembly, the 103rd General Assembly, but you really need to go back to the 102nd General Assembly as well. And Jody's got the biographies of the new members from each of those general assemblies that I think is in the packet. So try to familiarize yourself with both of the new members from both of those general assemblies, because the 102nd really operated in a vacuum. They were the COVID General Assembly, and so they they weren't interacting with lobbyists and
Right, there was a group that a month ago had a new member welcome reception, and one of the second term legislators like, you need to invite us too, because they didn't have any of that interaction. They haven't met groups in the Capitol. They haven't gone around and had that experience of a busload of people to come talk to them about whatever issues. So so they're done in a month. And I would say it's, unless you're at the Capitol in the next month, it's going to be difficult to see them at home. However, after that, they should be free and they want to learn and they're open to learning. I would say, especially with, it's in terms of mental, two things out of last year's session that kind of carried over to overarching themes was workplace recruitment and retention, just across all sectors, but especially in mental health. And then mental health. Those were two overarching things. I don't care what profession it was in, the legislators, those were issues that like, we need to focus on that. We need to figure out how to come up with solutions for that. And especially these younger members, they're interested. They introduced all kinds of bills related to mental health. And to Maureen's point of a lot of new bills, not necessarily always great ideas. I can't tell you how many times we're reviewing bills, right? No, that's already law. That's already law. But it shows that they want to have an impact and they want to address those issues. Also, just with younger people, there's certainly less of a stigma, and in terms of mental health, it's health. I have two kids in college, and when I've taken them on campus tours, they'll say, there's a health clinic. If you're sick, go in there. Also, if you're not feeling right in the head, there's counseling, go use it. And I said to them, not asking names, do any of your friends do that? And both of them, my kids are, oh yeah, this kid does, or that. And they said, yeah, they each have friends. So that they talk open about it. And we're seeing that with the legislators too, that mental health is health. And they are excited and want to learn more about when they hear about, especially the new communities that are doing this, like, how do I do this for my community? And what does it mean? What services? And wow, it's approved by the voters. So, we're not the one thing that you have to, it's organic, which they really appreciate and respect. So in terms of after session, which again, May 19th, reach out, invite them to your office, have them learn about what services are provided in your community, because every district office is a conduit for information. And people call there with questions. I said every district office person could write a book in terms of some of the conversations they have to have, but they're a conduit for information, and the easier it is for them to get that information out to their constituents, the better. Every district office, or most, I hope, puts out newsletters. If you have content, links to resources, they love that if it's ready-made. Having been a former staff person where you're scrambling to try to find things, if it's ready-made, oh, that's wonderful. They're going to include that in their newsletter. But invite them out and be a resource. My favorite thing is when I hear from, one of the clients saying, listen, state representative so-and-so called me and asked our opinion on this. Like, that's great. That's not us, really thrusting our opinion on them. They want to use ACMHAI as a resource, which it really makes our job easier, but also, it speaks to the credibility of each and every one of you in terms of how you serve the community and your expertise.
And so on following up on that concept, bear in mind that unlike Congress, Congress has individual congressional members have pretty good staff, number of staff, and they are issue staff. So they'll have a staff person for education, for transportation, for energy and environment. In the Illinois General Assembly, they don't have those staff people, and you become the staff person locally. So keep that in mind, that usually the information that they're going to get on an issue will be coming from an advocate of some kind or another. And in our case, you know, you are those advocates at the local level. So it's, you know, education and communication, education and communication. And if you want details on any bills, you have to attend the board meeting tomorrow. So yeah, just today, we just really wanted to provide that overview.
Yeah, and I mean, it's interesting just talking to people, to each of you about different new members, and you know, we're trying to learn out about this legislator, that legislator, where's this person come from? And Ron, I'm gonna pick on you. Ron, I'm gonna pick on you. So we said, oh, Ron, you have a new state senator, and you've known him for how long? And
He's been on our board for 7 years.
Right. So,
And yeah, we just found a new replacement. He was a township clerk, he was a township trustee, he was a township liaison to our board. Because the appointing body can only have one board member that they can appoint to a mental health commission. And so he was in that role. So I was talking to him just the other day regarding the current concern that we have with the House bill that's moved into the Senate, because he is on the local government committee, which if it does move forward, may very well be the committee that looks at it.
right. Yeah, so and if you do just, you know, say, you know, identify like, all right, we have new legislators. And you ask your board if they know them. But also, if you do know them, have a relationship like that, let us know. That helps, because then we know that their learning curve isn't as long as the learning curve of someone who graduated from college last May. Although those individuals may have, you know, more knowledge in this space than we're aware of. But it's been exciting just to meet all these new individuals, learning, you know, professional violinist, that's fantastic. You know, iron worker, you're working on a bridge over break, or yeah, anesthesiologist. So that it's and they each have their own perspective, and you know, the cliche of drinking from a fire hose, you know, when they get sworn into office. And to Maureen's point about them having staff, well, they got sworn in January. They have to find an office and they have to hire people, and they have to figure out just they're starting from scratch.
And yeah, pretend they know everything about everything.
Right, yeah. So, you know, especially probably during this first year, they're just taking notes of, Joe Smith called, he opposes this bill. And Joe will get an email back, thank you for letting us know we're reviewing it. And he'll get no other information at this time, but you know, they're doing a lot of digging, so they're still working through how their own operation is going to set up. But to you know, to serve as a resource for them is helpful to us, but also builds the credibility and helps you know, get the mission of your organization moving better, especially, you know, after you have that.
Questions on that kind of general overview? Like I said, no, we're not going to discuss bills now. Yes, Ron.
Senator Mike Porfirio also is a commander in active naval reserve, which would be a lieutenant colonel for those who are Army oriented. It's just something else to know about it.
Well,
It's two dogs named Rodney and Don.
well, when I met
He
him,
likes chocolate sodas. No,
when I met him, I have a lanyard of the high school that I went to, Brother Rice, which was a rival of his. And he was walking down the hall and I hadn't seen him. He was like, really, Brother Rice? And I'm like, where'd you go? So, St. Rita. So it just,
oh, I was
you know,
gonna say,
that's
what were you, Maurice anyway?
Yeah.
St. Rita.
Yeah.
And actually, I have a Frank and Ernest cartoon. I love Frank and Ernest. And one is saying to the other, asking the other, is it who you know or what you know? And the response was, it's what you know about who you know. Ooh. And that is really, I mean, that gets to the heart of get to know your legislator. Yeah. Otherwise, we'll see you at the board meeting tomorrow.
Thank you.
All right, thanks.
thank you.
Yeah.
We're done early.
Ron, I didn't make that up, right? There's all the things.
Is it printed by aggregate? Thank you. By aggregate.
I'll have to remember that. I know he had dogs. He also has a baby.
It's for the NATO training mission in Afghanistan.
That's right.
I think that we're gonna have, are we gonna have now where we can ask questions as new board members?
So folks.
We're gonna talk.
You know, Jody, I just sent you something. I didn't get the link to Google Docs. I didn't get that. Very important. I got the one that said, you know, it will be coming out, it will be coming out a week before the event. And yeah, and I'm looking through my emails under your name, unless it came under it. Maybe. Oh, yeah, yeah, so. Okay, yeah.
I might turn the chair to the other side.
Mine, we're going to do a little bit of a round.
So we have a fun for tables. Yeah, so we have a lot of new words here. You might have specific issues they want to talk about. We're all affected by legislation that or introduced legislation or I mean, we kind of talk about PTELL some more. You're right, but anyway, so
We're listening here as well. Thank you.
Yeah, yeah, we can see you all.
Separate phone.
I don't know how to organize a conversation like this. That's my. Yeah.
I'd like to hear the answer to these questions.
Yeah, I had several questions, but I'll just, that one is, I'm really into early bonding for mothers and newborn infants. And so my idea, which of course I'm not mentioned 708 yet, is to get the mother who might be on FMLA, having to be that. And if she is now missing her regular salary, I would like to supplement that with this idea for 3 months. And I'm wondering if anyone has done anything, attempted anything like that.
I'd like to hear other people's thoughts on it. I've got some very careful reads of the statute, so we haven't tried anything like that.
Just on an individual case by case basis that a mother from your geography would come to the mental health board.
So I know that YWCA has a mothering grant. They weekly visits to new mothers to help them with, I don't know, breastfeeding or diaper changing or, you know.
So be supporting an agency to do that. Is that what you're saying?
So there's already a structure there. YWCA. And I would think maybe that them. But I don't think they although they provide background information for the new mother, they're not really giving stipends to the mother, specifically for bonding, letting her stay home from work. Then she can stay and bond for the.
So one-time money, not annualized.
It would be the money.
You know, if, now we don't fund that. However, if that came up as a need, and I think people can hear me.
Yes.
So I used to run a day camp.
I still think
So
it's good to use the microphone anyway, because there's a disadvantage to women with Soft voices.
Okay.
Yeah.
Virtual participants.
All right, so, I would look for a measurement of the need first. Because you're a new board, you need to put together a plan. You need to decide what your funding is going to be based on some sort of criteria, some sort of decision-making process. So I would, maybe the YWCA has some information on it. Maybe there's some national information, maybe there's some statewide information. There's various associations that deal with those types of things, as well as some college research or some other areas. So I would try and as well as developing the rest of your plan among the other needs in your community, I would see if there are people out in the community that say this is a need. Then you've got a justification and you've got some information to be able to measure it against the other needs.
And did you develop your funding guidelines yet?
Yes, we've got a first year budget.
Yeah, I'm done.
We've developed a first year budget of roughly 75,000, or actually that's a loan from the township. So, and I'm not sure how much of that Lisa has been approved, but we do have a board budget that we're thinking of.
And funding guidelines and how you're gonna distribute, because we can help you without that.
Okay, well, that would, we would.
I mean, all the boards here can help you with giving you information. I mean, we can go to Jody, or we can help you with setting up that foundation.
And Ron, to address your question regarding needs assessment and all of that. Actually, I'm.
And I have on the share screen, if you want to talk what we're trying to do with our needs assessment, I did share this at the training in Bartlett back on the 24th of March, when it's appropriate. I can walk through this and what we're doing here in Dundee.
Okay, great. So maybe you can contact me or through Joey, I greatly appreciate it. But Ron, so yes, there's a needs assessment and say, does this mother need financial assistance? But I'm kind of drawing back, and the big picture is, do all mothers need to bond with their infant?
And your needs assessment doesn't have to be based on income. Your needs assessment based on what's needed in the county.
Right.
So you could do a program that's applicable to everyone in your township, in your county, and whatever it is.
So my point of view is the question, scientific question, or the sociological question. Is bonding between the new infant and the mother important or not? And will you see positive impacts in 6 months, 6 years, 20 years? When they're parents, it goes on forever.
Oh, and I mean, for an example, we fund the leadership. We fund a youth agency in our area, the leadership for youth leadership programs. And they develop service projects, they elect people, they do a number of things. It's a prevention program. When will you see the results of that? And there's no income, there's no fee charged for it. We fund the agency for the program, and we fund about a third of that agency's funding. So we will see the benefits for that when they're going to college, what career they choose, whether they come back and they work in the community or they're social workers or whatever. We'll see the benefit for that as their parents, as they develop as community leaders. And so that just goes on, and there's no income base on it. But there is substantial research on the benefits for youth leadership programs.
So,
Hi, Drew Bolda, again, Lyle Township. One of the things that I seem to be a bit confused on is the needs assessment. I anticipate that the needs assessment will direct the funding with the interpretation of the board. And so does a need like that need to show up in the needs assessment before the board advocates for it? Or does the board identify a need independently of the needs assessment? Thanks.
Well, you know, in our case.
I don't know.
I would say.
Probably everyone does it differently, but I would think the needs assessment feeds your strategic plan. So I think as a board, it's very important to develop a strategic plan. And the strategic plan, ours is, 3 years out. So your needs assessment is just the beginning. It feeds your strategic plan that you and the board would do together. And that's where you would lay out all the initiatives that you're wanting to accomplish. I mean, I don't know if other boards do it differently, but that's just a simple way of it.
You're the political. Okay, just real quick, a comment to what you said earlier. Yes, it could benefit every mother, every parent. Maybe I would suggest looking at who is in the biggest need. So even thinking of like a needs assessment or your strategic plan, if you can't give the funding to every single mother. So who would be like the mothers with the highest need? Is it, because there are some businesses that will pay for, maternity leave for 3 months or so. And then there might be some businesses that will pay for any, period. So I would think that that would be part of your client eligibility requirements as far as do they have to have a certain income? Is it, and so maybe even starting off small, does it, like what are the requirements as far as, is it a single mother household? Is it someone that is like involved in the SNAP program? I'm just making stuff up. But anyways, just thinking of that client eligibility and like those that would be in the biggest need that otherwise would not be able to do that, or they may be working 2 to 3 jobs 4 weeks after the doctor clears them. So anyways.
I get this fast, I'm just saying.
And I was just gonna say another part of that is with your needs assessment, who is doing something now? Besides, you mentioned the why, what are the other resources? Are they being utilized, the health department, so on and so forth, for the variety of programs that they have? So you definitely don't want to be duplicating. Coordination is key.
Well, I may not be last, but I have a mic, so I can follow it. Not to play devil's advocate, but maybe following up on Thomas' point a little bit. I think we all know that the Mental Health Act is very broad in terms of the definition of certain mental health as defined by the board. And so with that, a number of us have taken license to include prevention, programming, and some other non-traditional mental health treatment kind of services. But I feel that we could be under some possible attack for funding something that would be more a maternal child health development thing, that there are public health resources, that there are other entities who may be responsible. And perhaps you would have to have a pretty liberal definition of prevention if you were going to fund this as a mental health service.
Or funded for those with mental health.
Yeah.
Developmental disabilities or substance abuse. So if you could tie it to the community mental health act. Yeah, that's a good point. That if you want to tie it to, mental health, substance use, or intellectual developmental disabilities, and then people who maybe have a warranted need who could benefit from that. But the health department would really be, it would probably be more under their scope. So yeah, I would agree and check with the health department.
Well, and aside from also, looking at the need, looking if it's under mental health. You've come up with a specific solution first. I'm going to give money to people who need that for bonding. What's the evidence-based practices? What works?
Healthy Start.
Yeah, but I mean, the things that are out there, in any category, what works
Right, we have,
and who provides that?
so what is, the program is federally evidence-based and agencies to be accredited, and it's called Healthy Start.
But yeah, but yeah, before coming up with the solutions, look out and see what are the practices out there? What's the best practices? What's current in the field? Who provides that? Those types of things in any of the categories that you look at, whether it's this particular program or need or some other areas.
The Bloomingdale board is funding 13 families with early visiting, not a stipend. And we could only afford that many families where they visit, because I think it was from 0 to 3 years. There was like, there's a void from 3 to 5 years, the schools take over, but there's but those first years are critical. So the board, with the persuasion of the presenters said, like, this is something we need to do. And we couldn't afford to do everybody. And then I also remember, because I've learned from all ACMHAI people here, Lisa DeVivo said, if you see a need, if you see somebody in trouble, especially a kid, you solve that problem. You figure out a way to solve that. We take care of everybody. I remember her telling me that, you know, I always take that to heart. Because there are some really one-off problems that require very specialized care that isn't going to show up maybe even in a broad-based survey of needs. But for that person, it changes their life, right? Yeah.
Any other questions or? Yeah. I'm gonna make you walk. Something that occurs to me too is that in any funding decisions or in setting up your guidelines, you want to think about the purpose of the mental health. You know, you have a purpose by statute. And that is part of that is to create a comprehensive network of providers. And so it is important, you know, that as you see needs, you search for providers that can fill those needs. And maybe that is really the focus. And if the YWCA offers something similar to this, maybe you talk with them about providing service, funding service, so it's not coming directly from you. Your job is to create a comprehensive network to provide those services. Anybody else?
I would concur with knowing whom the providers are in the local community. Our approach in Dundee Township, as we're part of Kane County, we took advantage of the Illinois Project for Local Assessment of Needs, or the I-Plan Community Needs Assessment that was issued a little over a year ago. When we were reviewing it for the needs of Dundee Township, though, we were drilling down into the information, and we did find some significant data gaps. A very significant one is the first sub-bullet there. 15% of our township's population was not included in secondary data analytics. So whereas there was some good primary research done, for instance, in the northern end, if you're unfamiliar with Kane County, think of a elongated rectangle, and a bulk of the hospitals that were used for the needs assessment of the county were in the central area, not where Dundee patients generally go for mental health needs or any other hospital needs. So we've addressed this with the county. Some of the other things, you know, the lack of law enforcement information that was used by the county in the previous needs assessment. So this year, Kane County budgeted to refresh all of its data, and we're trying to do our best in order to stretch the dollars, because of course dollars are always going to be limited. And we're trying to enhance the secondary research, bridge the data gaps, working through the county first. And they're still doing the prospective RFPs. So we know we likely won't get everything that we're looking for, but I think we'll get more than what we had. But in the concurrently, okay, so 15% of our population wasn't included. Therefore, though, 85% was. So we had enough to work with the information we had to begin soliciting for the agency what kind of funding requests they would need to be supported by our new fledgling startup mental health board. So as you read down into the second to last bullet point, if the gaps from the county cannot be addressed by the I-Plan update of the county, our board is ready to pursue our own needs assessment to complement, not to reinvent the wheel, but to complement it and ensure that the data is scalable, compatible, and not double counted, and of course, always protecting privacy. So for instance, in the northern end of Kane County, many of our mental health needs are done through McHenry County. One of two possible hospitals, and maybe some in Cook County to the due east of us in the northwest suburbs. So we're trying to gather as we're starting up the best possible infrastructure that we can with the data to ensure we're not going to miss any patients, but concurrently, we are hopefully as soon as next month going to announce our initial awards to grant for funding local agencies that we know are meeting our township residents' need. We're a township of a population of 64,700 and change. We have nearly 40% Spanish speaking population, and some of the programs that we're likely going to look to fund are going to include bilingual help. But that last bullet point, in addition to the mental health levy, our township board did set up special project funding for up to 50,000 to ensure we can do that complementing of a needs assessment. If the county cannot meet our needs, we can go out and fill those gaps ourselves. So we tried our best to be flexible. We're working with what we have through the county, but we also know we might have to go it alone in some cases, and we will. And we're just trying to be as best prepared and as best flexible what the needs, what's the data is going to tell us is going to be needed. And at the same time, start up with funding the local agencies that we know are treating Dundee Township patients. So just a very high overview there. This was presented at our annual town meeting this past Tuesday, and the public is satisfied that, you know, in spite of the legal delays, you know, we are heading down the right best practices path, but we certainly can learn from what the other boards are doing as well. So I hope this helps.
Thank you, Mark. Anybody else? Okay. Some of the different, I think, entities here, said there were 7 or 8 boards, and then they had other things attached, like I can't remember the numbers.
377. 377 is the Developmental Disabilities Board. And the others. 553.
So is that like a not for profit, or that's just a board? Okay, thank you. Okay, well, we will adjourn until 5 o'clock, so the reception this evening, 5 to 7, and upstairs, and we're going to 5 and 6 for lunch and stuff. Okay. Thank you so much. Recorded, we'll send out the
Okay, thank y'all. See you all tomorrow morning.